Good evening and welcome to this session of the virtual coaching classes organized by the Board of Studies of the Institute of Chartered Accountants of India. Today, we are going to start another fresh topic, possibly very exciting and very dynamic. In fact, we'll be discussing a lot of things that deal with meetings of board and its powers. So very dynamic. I would say this is the dynamics of corporate management. When you, during intermediate or whatever you call it, when you studied, administration of companies, meetings and administration of companies, you studied about general meetings, how the shareholders operate and how they meet and how they take decisions, etc., etc. And you also learned about, annual general meeting, extraordinary general meetings, etc., etc. Now, this chapter 12 of the Companies Act 2013 deals with the meetings of the board. Obviously, the board will meet more frequently, and because they will be engaged in taking decisions of a more immediate nature. So they can't afford to wait for a whole year for the AGM to come. So meetings would happen. Not only that, many of the functions of the board cannot be exercised directly by the board. So they would form committees. And these committees will also meet and take decisions and broadly lay down the policy framework within which the company will operate. In fact, this is the brief. The board generally should not engage itself in operational level issues. They should only engage in strategic issues, long-term planning, policy framework, control mechanisms, and then entrust it to a group of professionals who will manage the company on a day-to-day basis, reporting to the board. This is the international framework. See, in India, unfortunately, with family-owned businesses and owner-driven managements, it's quite possible for the MD himself to take care of day-to-day management. He will come and sit on a daily basis and take decisions. Normally, this is not done abroad, right? There is a CEO. The role of the CEO is exactly what our owner-driven managing directors are doing currently. Whereas what is expected is that they would sit only for strategy and long-term anyway. Having said this, the Companies Act 2013 lays down a very, very comfortable framework with certain checks and balances on the powers of the board. Always remembering that the board of directors the board of directors is not the ownership group. The directors are not the owners. They are merely the stewards, the managers, the people who are running the company on behalf of the shareholders. So just as we saw in appointment of directors, all directorial appointments ultimately have to come up before the members. Similarly, the powers of the board are also subject to the powers of the members. So, in this topic on board meetings, to give you a broad summary of what we may be discussing over the sessions. I mean, this is only with regard to board meetings. We are also going to see powers of directors, and we are also going to see related party transactions, etc., etc. So, with regard to board meetings, we would be talking about the frequency of the meetings. The basic, how many meetings should be held in a year? How many times should the board of directors meet? This will be answered in section 173, subsection 1. Recently, with digital, modes of, working becoming popular, not necessarily post-pandemic. Believe me, see, the meetings, online meetings, video conferencing, etc., has been in vogue for quite some time now, a little more than a decade. What happened was pandemic made it a necessity that we should operate from home and that people should be willing to meet on video, etc. Whereas large corporates had already put in place, at least for the top management teams, which are working across geography, to be able to communicate with each other through video conferencing. But except that they were very costly and extremely, secured, which meant that they needed more money to maintain, which means common man could not use to. But then with the introduction of software like Zoom or Skype or whatever we are now using, it is now possible ordinary people can also have meetings across geography, or rather geography non-specific. Working is now possible. Therefore, the Companies Act also accepts that board meetings could be done in video conferencing mode or any other digital method. How it can be done, when it can be done, what are those matters for which you cannot have video conferencing. So this will be the subject of that topic. Just as you need a notice for calling a general meeting, you also need a notice for calling a board meeting. Talk about that. Just as a general meeting needs to have a quorum. Quorum is the minimum number of members, right? So that would be studied in 174. Where and when, venue and time of the meeting. Then agenda means what are we going to discuss at the meeting. Once we get into agenda, we will also talk about passing of resolutions by circulation rather than at a meeting of the board. See, when the directors meet, whether in person or through video conferencing, when they meet and they discuss and they pass a resolution, that is a normal board meeting. But instead of meeting at all, if they can circulate the subject matter and they give their consent, it is called passing of resolutions by circulation. So we will discuss how passing of resolution by circulation happens. But you should be more concerned about understanding when you cannot pass resolutions by circulation. We'll talk about that. So whenever in the Act you see the words at a meeting of the board, at a meeting of the board, you can be sure that that is a matter that cannot be done by passing a resolution by circulation. Okay, so we'll discuss all that. So let's get quickly into frequency of meetings, meaning how many meetings should be held in an year, right? Year always means calendar year. You studied this in intermediate when you studied General Clauses Act. Whenever the word year, surf year, okay, is used, it is calendar year beginning on the 1st of January and ending on the 31st of March. Whereas when you use the word financial year, we mean the period beginning on the 1st of April and ending on the 31st of March, right? So every company shall hold its first meeting of the board of directors within 30 days of date of incorporation, right? Within 30 days of its date of incorporation, the first meeting should be held. This is very important because it is at this meeting that many things are officialized, many things are approved. The first auditor is appointed, right, etc. So the preliminary expenses are approved. All these approvals are given at the first meeting, first board director. So within 30 days, the first board meeting should be held. Thereafter, subsequent board meetings, it shall hold a minimum of 4 meetings of its board of directors every year. So year again is calendar year. So minimum of 4 meetings, 4 meetings every year, 4 board meetings every year. Right. So, okay. So let me have board meetings. Like I'll have 2 meetings in January and February. Then again, November and December. Sorry, not possible because you should have 4 meetings and in such a manner that not more than 120 days shall intervene between 2 consecutive meetings. So the gap between 2 meetings should not be more than 120 days. So you hold a board meeting, then start counting from the next day. 1, 2, 3. You should reach 120. Before 120 is over, you have to hold another board meeting. Or on the 120th day, you have to hold a board meeting. They use the word shall intervene, which means the gap between. So you leave the 2 board meeting dates. In between, we count the days. It should be less than 120 or 120 exactly. That board meeting can be held on the 120th day. But if it is held on the 121st day, the gap is more than 120 days between 2 consecutive meetings of the board. So after you finish holding 1 meeting, start counting from the next day. Before the end of the 120th day, you have to hold another meeting. If you hold it on the 121st day, then out. Exceptions are there as usual. There are many exceptions. One-person company, small company, dormant company, and private company, if such private company is a startup. Please remember, a startup private company, a private company which is a startup. Startup means it should be recognized. It should obtain the certificate from the Ministry of Commerce. Okay, there's a certificate that has to be obtained by that company from the ministry. Only then it's called a startup private company. So such a company shall be deemed to have complied. So other private companies which are not startup, normal rule. Private company, if it is a startup alone, shall, and one-person company, small company, dormant company, shall be deemed to have complied with the provisions of this section if at least one meeting of the board of directors has been conducted in each half of a calendar year. So, calendar year, here they use the word calendar year, not even the year. Here they use the word calendar year, which means 1st January to June 30th, one meeting. Then July 1st to this 31st December, another meeting. But the gap between the two meetings is not less than 90 days. See, here they say the gap between the two meetings is not less than 90 days. Okay. It should not be less than 90 days. It can be more, but not less. So in other words, you can't hold a meeting in, say, on June 17th, and then immediately July hold another meeting and say 2 meetings held. Okay. In the 2.5 years, no. So the gap should not be less than 90 days. So, but here they say more than 120 days. There they say less than 90 days. Just observe the difference. The purpose is that you can't hold 2 meetings. Just see there, you cannot hold 2 meetings in one and then give a huge gap and then hold another 2 meetings immediately succeeding in 1 month each. You should, so they say it should be spaced out. Here they say you need to hold only 1 meeting in 1.5 year, another in another half year. But you should not do it in such a way that you finish the whole thing within June, July. So, or maybe something like that. So you need to give a gap, is what they're saying. Okay. But one thing, these are all minimum. If you want to have 12 meetings every month, you can. I mean, 12 meetings in a year, you can. Many listed companies have a board meeting every month. Every month. Or some companies have once in every quarter. Okay. Of course, your 120 days will mean you should have a board meeting once in every quarter. Okay. It will ultimately end up with a quarter. Every quarter, you should have 1 meeting, which is the normal. But many listed companies have the monthly meetings. Every month, on a specified day, the board meets and takes calls, decisions. So this is how corporate boards work. But of course, in family-owned businesses, owner-driven management businesses, you might find they don't bother about board meetings because, after all, who are the board of directors? Father, mother, son, like we saw in Adekar. So initial days of Adekar Industries, when it was just a small company, starting, before it became such a big company with 15 directors, we saw that case study in the last, when we spoke about managerial personnel. I've been using Adekar continuously, if you might see, as a running case study. So before it became so big, I'm sure the board would have consisted only of Vikram, Vimala, and Vimal Adekar, and that's Vikram, Vimala, and Vijay, the son. Okay, so the 3 of them would have been the directors. So why would they need a board meeting? In fact, my father used to say, what board meetings are? Every day you meet at the dining table, there is a board meeting. You are giving discussions on the company only. Your family is continuously engaged in this. So why special? So what happens is they will not bother. Then finally the company secretary will come and then he or she will have to take a call, take one of these dates and say, hey, that is the date of the board meeting, and write minutes and all that. And any event which has happened in between would get approved in that. So it will be more booking of minutes rather than actually voting. This happens in family-owned businesses. But for professionally managed listed companies, 100% there should be a proper formal board meeting, at least 4 times in a year. The gap between 2 board meetings should not be more than 120 days. For these companies, 1 in each half year is enough, but the gap should not be less than 90 days. 173 and 174 do not apply to an OPC which has only 1 director. 174 deals with the quorum. Now, so why quorum? Only 1 guy is there. What quorum? So 173 and 174 do not apply to an OPC which has only 1 director. See, an OPC can have more than 1 director. Only 1 shareholder but can have member, but can have more than one director. Even up to 15 directors OPC can have. Okay. So, but it can also have only one. Minimum one, maximum 15. Okay. Board of directors of a Section 8 company shall hold at least one meeting within every 6 calendar months. Means 6 calendar months, you should hold one meeting. Okay, in this case, you can hold a meeting in Jan or maybe in April, May, June, then again in July, no problem. That 90 days condition does not apply to Section 8 company. But this exemption of holding one meeting within every 6 calendar months, flexibility is given only to a Section 8 company which has filed its annual return and financial statements. We already saw that. Here we go with a practical problem. So, nobody is giving any greetings. Yeah, usually I'll get some good evenings and all that. Nothing. So I'm really worried whether anybody is at all, listening to what I'm saying online. So just put some greeting or something to show that you are there. Whoever is there would like to share their names and be on, do that. In the meantime, let's get into the problem. Again, we go back to my Adekar Industries. Now, Adekar, yeah, so nice. Avija Kodali is here, very good, madam. Hari is there. Jana is here, good. Now, but my usual suspects are not there. Dara Shah, what happened? And a lot of you are there. I can't keep naming all of you here. And some of you might have a genuine reason for not attending and maybe, watching the downloaded video later. Where even then, if you are doing that, hi. Okay, now coming to the point. Adekar Industries Limited conducted, Sudhir, welcome. No problem. Adekar Industries Limited conducted board meetings during 2019 on 5/3/17/31/10 and an emergency board meeting on 15/11. No problem. Okay. So they held it on 31/10. Again, they held it on 15/11 for obvious some reasons. It can be, for other than the exempted companies, it should not be more than 120 days. It can be less than 120 days. Next day also, no problem. So, what I have done here is, I have taken 5/3 as the reference point, and from that date, I have started counting days, gap. So, I find that 1 and 2, board meeting number 1 and 2, the gap between is 117. How I arrived at also, I have given there, so that you can, later on, you can even check it out, whether it's right, or you can do that now. So, we have March 5th. So, in March, we have 26 days, April 30, May 31, and June 30. On 1/7, you are having the meeting. So, the gap is 117, right? The gap is 117. No problem. Great. Wonderful. Okay. Okay, here we go. How many months or which of the months in the calendar which have 28 days? Which of the months or month which has 28 days? Just try it out. I'm sure many of you know the answer. I'm sure all of you know the answer here. 28 days. Okay. Yeah, you can, any of you interested can answer that. Let's see if you give the correct answer. Okay. Now, coming to the point. Next meeting is on 31/10. So, start counting days. You find... Okay, Jana says February. Let's see if anybody got the point. In fact, I gave a clue there. I said, which of the months have 28 days? Which of the months have 28 days? I use the plural. Okay. Manini Jana. She says February. Good. Correct. Rashmi Kamath says all months have 28 days, sir. All. You got it, Ms. Jana? All months have 28 days. It's actually for a group of highly brilliant CA students, this question should not be asked, just to keep you alert, that's all. Okay. All months have 28 days. Only February has only 28 days, but all months have 28 days. Okay. March and June have 31, 30 respectively, but All of them have 28 days. So these are all called small lateral thinking puzzles, which are meant to promote. Yeah, thank you. So now I know that people are available and listening. That is good. That is good. Okay. Now we go on to, so here when I count, I find the gap between 2 and 3 is 121, which means the meeting is held on 3110, which is on the 121st day, right? Which means 122nd day technically, which means it's that 1 day means more than 120. Therefore, although, and of course, 1511, no problem, only 14 days. But although it has conducted 4 board meetings, the gap between BM2 and BM3 is 121. That is greater than 120 days. Therefore, it has not complied with 173.1. Okay. Pulp Fiction Private Limited, an online startup company, has held board meetings on 15/3/2019 and 30/6/2019. So it is an online startup company, private limited startup company. Okay. So the dates are there. Again, it's a question of time. Okay. Has the company complied with the Companies Act as applicable to private company, which is a startup? So a private company, if such company is a startup, shall be deemed to have complied if at least 1 meeting has been conducted in each half of, and the gap between the 2 meetings is not less than 90 days. So the gap between is not less than 90 days. Am I correct? 15th March, 30th June. So both the meetings have been held. Can be seen that though the gap between the 2 board meetings is not less than 90 days, both the meetings have been held in the first half of the calendar year 2019. See, if only they had held it on 1/7, no problem, because 1/7 would go into the next half. Unfortunately, they held the meeting on 36. Therefore, the company has not complied with 173.5 as applicable to a private company, which is a startup. Okay. We make this point very carefully. You know why? In a descriptive answer, be accurate. 173.5 deals with this situation only. The exception is what we are operating under, as applicable to a private company, which is a startup. But even there, they have not complied with, is the point, right? So these are 2 examples I gave you on how to compute. So just you have to be careful. When you're working with this type of a problem, please remember to double check your calculations. All of us make mistakes. Okay. So nobody is perfect. No. Perfection is unto God alone. Perfection is unto God alone. Human being by nature is imperfect. By definition is imperfect. After created beings are imperfect. The creator alone is perfect. Therefore, don't expect perfection from yourself. Verify yourself again and again to be sure that you are correct. So directors may participate. Now we come to participation. 173 subsection 2. Participation of directors. Participation is possible in person or through video conferencing. Just like, in a general meeting, a member may participate or a member may attend in person or through proxy, right? Here, a director may participate in a board meeting either in person or through video conferencing or other audio-visual means. So they give one opening there. Yeah, there are penalty provisions, Mr. Jose. Absolutely. Good question asked. In case you violate any of these sections, there are penalty provisions. And remember, in case you do not, there is no penalty provision in the Act for anything, then there is an omnibus penalty provision available, which you will study when you come to miscellaneous provisions. I forget the section number. So that omnibus penalty will apply. I remember having covered it when we covered appointment on qualification of directors. So where there is no penal provision, see, there is a duty to be done or something which should not be done. And that section or that chapter does not prescribe any penalty, then there is an omnibus, means common penalty provision, where no penalty has been prescribed, that section will apply. Okay. So even if nothing is prescribed, you have to take that. The MCA will use that omnibus. Omnibus means all-purpose provision, apply it. So to answer your question, yes, coming. They may be coming, even if they don't come, omnibus. Yeah, 172. Rashmi Kamal says 172. Okay, agreed. Now, moving on to so in person through video conferencing, other audio-visual means. Okay. Now, we are going to see when video conferencing cannot be used. Now, for most matters, video conferencing can be used. But they say certain matters, video conferencing cannot be used. Okay, so the following matters shall not be dealt with in any meeting held through video conferencing or other audiovisual means. See, video conferencing is very costly. It is difficult. It works through secured LAN, and it's not easy for everybody. Whereas we have, virtual meeting places like online, digital meeting places like Zoom, Google Meet, Microsoft, blah, blah. There are so many of them, right? So you can use that also. This would be coming under the heading other audio-visual means. Earlier, when they were introducing video conferencing, they had a lot of prescription on how it should be done, blah, blah, blah. But now they realize that, there is an ubiquity. There are so many other audio-visual means are there. See, your WhatsApp itself is a audio-visual means. You can have a con call in WhatsApp. Why not? If there are only 4 directors, why not? All of them can come on through WhatsApp and take a call and say, let's have a board meeting and do it. 5 of them can come together and have a discussion. Nothing wrong. See, the purpose of a board meeting is to take decisions, approve certain things so that the company can go on, right? Unlike a general meeting, it need not be so rigid, right? So, not necessary that it should be like this. So, should be capable of recording and recognizing the participation of the directors. All that they say is the other audio-visual means should be capable of recording and recognizing the participation of the directors and of recording and storing the proceedings of such meetings along with the date and time. That's all they're saying, which is quite possible in Zoom. This meeting is being recorded. Date is known. The separate file will be there. So we will know who spoke, what they said. Attendance will also be there because we will know how many people participated and it will be reported. Okay, that is how it is. Now, we just go one step and then come back. The following matters shall not be dealt with in any meeting held through video conferencing or other audio-visual means. Means any matter can be done through video conferencing, except these matters. What are they? The approval of the annual financial statements. There they feel you come in person and discuss it. The approval of the board's report. Approval of the prospectus. Audit committee meetings for consideration of financial statement, including consolidated financial statement, if any, to be approved by the board. The approval of matters relating to amalgamation, merger, demerger, acquisition, and takeover. These cannot be done through video conferencing. That is what Rule 4 says. Then what happened? 2020, March 24, 2020. Our great country, our great Prime Minister tells us, go home and stay at home. Don't come out. Okay, like that for our own safety, we were protected, whatever it is. So that time what the MCA said, you can have video conferencing for all matters. So that was till 30th June 2021. When the pandemic threat was slowly dissipating, they stopped. They kept on extending the date till 30th June 2021. Thereafter, these matters now cannot be done by video conferencing. Only physical meeting. Anything else can be done through video conferencing. Got it? Now, where there is, we will be seeing quorum of the meeting in a very short while. We will be seeing quorum for a meeting. What it is, we will see. Assume that that number is there. There is a quorum in a meeting through physical presence. Now, when there is I have called a physical meeting. Now, physical meeting will be held at a place. At that place, the minimum quorum is present. Now, other directors can participate through video conference. You understand? So long as the meeting is a physical meeting, quorum is present, other directors can participate or may participate through video conferencing or other audio-visual meeting. In such meeting on any matter which cannot be dealt with in video conference. So, what happens is we have to consider, we have to consider the accounts, annual financial approval as be given. couple of guys are abroad. They're not going to come to India in the next near future, but we need to still do it. Luckily for us, Quorum is present in India. So what we will do, we'll call for a physical meeting. The Quorum will come to the board meeting. There will be a huge TV there, or maybe on my laptop or on the laptop. The other two buggers will come on the online mode. Then all of them will sit around and talk and take a call. So long as the Quorum is present in India, physically present in India, obviously in India, you can have board meetings abroad also. No such restrictions for board meetings you can have, right? So this is the point that you should remember. Now, 173.3, notice. Notice means knowledge. If you want somebody to come for a meeting, you should give him knowledge about it. That is notice. So earlier in the old law, there was no notice period for board meeting. You could give a board meeting by giving 1 day's notice also. But now they have said not less than 7 days notice. And board meeting should be, the notice should be in writing to every director at his address registered with the company. But how to send it? See, the word writing, you have to be very, very careful. Writing does not only mean on print media, digital also writing. So they say such notice shall be sent by hand delivery or by post or by electronic means, which means email also accepted. Electronic means. So long as it is given by email, see, to his registered email ID with the company, no problem. That is why it's a prudent secretarial practice to have a master data of directors approved by them. You just send them a sheet and say, hey, sir, this is your data, your name as it is spelled in your PAN card. Because tomorrow you might have to deduct TDS on your PAN number, your DIN, then your address for communication as per your PAN card. As per your Aadhaar card. You get all that KYC from that fellow. Don't let him go. Because tomorrow he'll say, this is not my name, that is not what this is. Then finally you say, this is your email ID, this is your mobile number. All communication is sent only to this email ID and this mobile number. It is official. And you don't have to tell him, so long as that is there in the as a policy framework. But be sure that you got it right, and then it can send to a email also. Okay. And then, of course, you have to ask him, what are all the companies in which you are a director, you are a shareholder? Disclosure. Because only if you have this list, later on you can analyze whether he's a related party transaction, whether he's an interested director. How do I know? I'm not God. I can't, by the Dirgha Darshan, I can't tell which all companies this fellow is a shareholder, director. I don't know, boss. He has to give it. We'll be seeing that also is compulsory. He has to give that list every year, which later on when you come to 184 and 185, we will see that. Okay, 188, we will see that. So based on that only, I can say whether this guy is interested or not, right? So he has to give it. Take that and keep it in a master file for directors and, sort of with a photograph and all that. That good secretarial practice. Okay. A board meeting may be called at shorter notice. Okay, so emergency, which is why in all its wisdom, the 56th law never gave any notice period. Right? It left to the discretion of the company, its maturity level, the need. There is that you have many listed companies give 15 days notice, 25 days, 30 days notice. Minimum 15 days notice they give to their directors because these directors are not big shot. You can't just tell him to come tomorrow. So sometimes they give advance notice to the director, take his convenience, then only they send. All that is possible. But sometimes, you might have to hold it at a shorter notice. So there in those days, no such day was prescribed, the number of days. But today they themselves are put, not less than 7 days. So they give an exception. You can call it at shorter notice to transact urgent business. Kya hai urgent business? I don't know. What is urgent? Tell me. But whatever it is, if you think it is urgent, then you can have a meeting by giving shorter notice. But at least one independent director, if any, shall be present at that meeting. At least one independent director, if any, shall be present at that meeting. That's all this. Okay. Sir, I don't have any independent directors, sir. Then what to do? In case of absence of independent directors from such a meeting, decision taken at such meeting shall be circulated to all the directors and shall be final only on ratification thereof by at least one independent director, if any. The word if any is very important, which means if a company does not have the need to appoint independent directors, you can have shorter notice without bothering about presence of independent director. But if you are a company which should have independent directors compulsory, then if such an independent director is there, then at least one of them should attend this meeting called at shorter notice. And if such a person is not attending, then it has to be circulated to all the directors and at least one independent director should ratify. So they've given a lot of power to that independent director. Okay. So every officer of the company whose duty it is to give notice under this section and who fails to do so shall be liable to a penalty of 25,000 rupees. So this is a specific penalty for 173(3). Now, there is no particular form of notice. See, though the Institute of Company Secretaries, secretarial standards may provide some suggestions, but by and large, there is no. See, it's just a notice. So you can say notice. Notice is hereby given that the board meeting of Manar and Company Limited will be held on Tuesday, so the 8th of November 2022 at the registered office of the company or at the boardroom, Manar House, 23 Second Line Beach, Chennai, 600001. I mean, just then to transact the following business. Then agenda 1, 2, 3, 4. Sorry. And then by order of the board, donkey, director, that's date, place. That's all. See, standard format. You can use it, but there's no particular form. Now, this is a very peculiar case law. I thought I could share with you Madras High Court decision, very old one, 1957 decision. Okay. Which means the case must have been filed in the old law. 56 only this law came. Now the case must have been an earlier case, got decided by the High Court. Okay. What happens now? Articles of the company provide that there will be a meeting on a particular day of every month. Okay. So the articles present, okay, they say there will be no need to serve notice. This is a very specific case law. Arunachal Chettiar versus Kalishwaran Mills, but could still be valid. You can always say, look here, I have given you advance notice. Tuesday, every month, first Tuesday, we will have a board meeting. You know that. Come. What are you waiting for notice? No need to give the notice. As a director, you are supposed to have read the articles. You cannot say you should have given me notice. But suppose you are changing the date from Tuesday to some other date, you have to give notice. Why? Because you are not holding it on that date. So you have to give notice. It's an interesting case I thought I could share with you. Right? Quorum. So quorum is the minimum number of persons required to constitute a valid meeting. Quorum is the minimum number of persons required to constitute a valid quorum. Now somebody is asking a question. Let us go there. Bonnie is very interested in asking questions. I'm so happy. Shorter notice can be 1 or 0 days. How it can be 0? You can't 0. I'm not able to understand. 24 hours, yes. 1 day I can understand. 24 hours notice we can give. 0 days. You can't say 0 days, right? Say less than 1 day, or notice of say 4 hours, 5 hours notice, 3 hours. But I mean, so that's what you can. Nothing wrong. For example, in the morning you give notice for the meeting to be held at 3 p.m. in the afternoon. Allowed. Shorter notice. Emergency, urgent matter. You can. Okay. Nothing. I don't. So they've said shorter notice. Less than 7 days. Could be even 1 hour notice can be given. What is that? But 0 days, not. I'm able to understand. So, but less than 1 day you can say. 0 days notice, not able to understand it. Less than 1 day means hourly calculation possible. Okay. Yeah, it can. Theoretically, yes, you can, provided you comply with the requirement. See, this is why 56 law was a wise law. It was a law based on wisdom. They said, don't interfere with this. Let the management board decide when they want to meet, how they want to, how short they want to give the notice. And if any director feels his right has been prejudiced, he can always come under operation and mismanagement. There are so many other relief. Okay. What are the urgent matters? No list, madam. You decide what is urgent. It is your it is your call. See, you know how when these are all will become issues, na? MCA is not bothered about all these things. It will become a problem if any one minority director objects. Suppose you are having minority shareholders, that if the minority shareholder objects to this, it will become a problem. He will say, this is not at all urgent matter. They could have given proper notice. Or even if it is urgent matter, it was given intentionally like that. So that is why they want one independent director to come. See, all this will become subject matter of controversy only before the tribunal when there is an action under oppression and mismanagement. Because consistently giving shorter notice, stating that the matter is urgent, and thereby preventing some directors from attending, is a clear example of oppression. Okay, where one group is not allowed to be properly represented and all. It is a clear example of oppression. Therefore, those people can object, again, not as directors, but as shareholders. They can say, the board meetings are held without all the directors being present. So to that extent, the company is being mismanaged. And as shareholders, our interest is being prejudiced. When such things come up, then the question will arise before the tribunal whether holding of this meeting was on urgent or not. And the tribunal will have to decide whether it is urgent. Quorum. Quorum is the minimum number of persons necessary for a valid meeting. So, Carom is a board game. I'm sure all of you have played Carom. C-A-R-R-O-M, Carom. This is Quorum, Q-U-O-R-U-M. You might ask me, sir, why are you telling like this? I'm sorry. Well, in the ACS Institute, we used to set a question paper for CC. They used to have completion certificate. So I used to set, and I used to teach law there. I mean, I used to teach almost all subjects and company law. So I will set up what is the quorum for the meeting of a private company. Then there I will give quorum spelling in the question. In spite of that, somebody will write C-A-R-R-O-M, Carom. So that's why I always make the point. Carom is a board game. Quorum is the minimum number of persons required to constitute a valid meeting. Right? What is that minimum number? If no director is interested, means if no director is having financial interest in the transaction, means that transaction should not be one where it is entered into with another company or firm where he is having a partner or his relative is a partner or director, then it's an interested transaction. Okay. So if all of them are disinterested, please note, opposite of interested is not uninterested in this context. See, the English language is such a treacherous language. The word interested has two antonyms. Opposite meaning words, we've got two words. Are you interested in this class? Yeah, you are interested, which means you are not uninterested. Okay. Are you disinterested? No, not really, because only if you have a financial connection with the matter, you are interested financially. Then if you don't have a financial connection with the matter, or if you are not benefiting financially from the decision, then you are disinterested. Are you able to understand? Either financially or in some way, your relative is going to be appointed as a director or something, then automatically you become interested, right? So, in those cases, you will be called interested director. So, if all the directors are disinterested, then the quorum is 1/3 of the total strength or 2, whichever is higher. 1/3 of the total strength of the board, 1/3 of the total strength of the board or 2, whichever is higher. Okay. Total strength means total number of directors minus vacancies. So for example, in Auditor Industries case, there are 15 directors, no vacancies. So the total strength is 15. So what is the quorum for Auditor Industries? 15 is the total strength, 1/3 of the total strength or 2, whichever is higher. 1/3 of 15 is 5. So minimum 5 directors have to attend. Right. But while counting that 5 directors, please understand, for total strength, we will include interested director also. I repeat, for counting total strength, we will include interested director also. All directors will be included. But when we see the attendance at the meeting for finding out if quorum is present, interested director will not be counted for quorum. So for calculating quorum, I will take total strength including interested director. I will arrive at the number. Then I will see who is attending. So then say who is interested. Oh, you are all interested. Go to the little to the side. You guys are not interested. Come this side. Disinterested fellows. Then I have to see whether there is a disinterested quorum, which means whether that number of disinterested directors actually attending is equal to 1/3 of total strength or 2, whichever is higher. Got it? Suppose I divide by 3 and I get a fraction. Then whatever may be the fraction, it will be rounded off as 1. As usual. Higher number. It will go to the higher. Okay. Now, up to now, I hope you have understood. Quorum for meeting of a board of directors is, quorum for the meeting of the board of directors is 1/3 of the total strength or 2, whichever is higher. If any interested director is attending the meeting, he should not be counted or she should not be counted for quorum. Without considering the interested directors, the quorum should be present. 1/3 should be present. Okay. If not, no quorum. Meeting cannot be conducted. Okay. Exception. If the number of interested directors exceeds or is equal to 2/3 of the total strength, suppose the number of interested directors exceeds or equal to 2/3 of the total strength, then the remaining directors, being not less than 2, shall form quorum. Even though they are not forming the valid quorum, if there are 2 of them, then they will be the valid quorum. But for the exception to operate, you should be careful. You should count the number of interested directors. That number should be 2/3 or more of the total strength. Then at that meeting, if 2 disinterested directors are there, they will form a valid quorum. Now, this can be understood with a problem which I will share a little later. Right now, let us look at how to calculate quorum. So the idea is just to help you. So 2, 1/3 not applicable. You should have minimum 2. Quorum is 2. 1/3 or 2, whichever is higher. 3, 1. Sorry, you can't have 1 director. You need 2. 4, 1.33, round off to 2. 5, 1.66, round off to 2. 6, exactly 2, 2. 7, 2.33, round off to 3. 8, 2.66, round off to 3. No problem. 9, exactly 3, 3. Now you can go on, just giving this example. Now, we are going to see this section again in disclosure of interest by the director. Section 184 deals with disclosure of interest by a director. That's what I said. The director should inform the company that he is interested, which are all the companies varies. Based on that only we can decide. So, but I'm now covering it to inform you that, see, 184 will inform you that in 184 you will learn an interested director should not be counted for quorum. Also, the interested director should not participate in the discussion. He should not vote. He shall not vote. And if he does vote, his vote shall be void. You will see that in 184. Whatever. No. So, but now what we are now seeing is who is an interested director. So the 184 defines this and says every director of a company who is in any way, whether directly or indirectly concerned or interested in a contract or arrangement or proposed contract or arrangement entered into or to be entered into. So existing contract or future contract also can be considered. Okay, proposed contract. So the discussion for that contract is a big term, not just a work contract, but every type of contract. For example, appointment of managing director, contract. Appointment of employee, contract. Okay, everything is contract. So any contract in which he is interested, okay, how do you say he is interested? If when he is a director, he is directly or indirectly concerned or interested in that body corporate. The company is proposing to enter into a contract or has entered into a contract or arrangement with that body corporate. So this director is having interest in that contract. How? A body corporate in which such director or such director in association with any other director holds more than 2% shareholding. So, a body corporate in which such director or such director in association with any other director holds more than 2% shareholding. So, more than 2%, up to 2%, no problem. Is a promoter, manager, chief executive officer of that body corporate. That is one thing. Suppose the contract is to be entered into with a firm or other entity in which such director is a partner, owner, or member, as the case may be. Other entity includes all proprietary also, right? Whatever may be that entity, this guy is a partner or is an owner or a member, as the case may be. In those cases, he is an interested director. He shall not be counted for quorum, etc., etc. Okay. AB Limited is proposing to enter into a contract with PQR Limited. Mr. A director of AB Limited, is holding 1% of the paid up share capital in PQR Limited. Mrs. A is a director of PQR Limited and is holding 25% of the paid up share capital. Is Mr. A an interested director for this matter? Okay. Now, the unfortunate problem is they are saying directly or indirectly. Okay. Whereas here they are very clearly saying such director or such director association with any other director holds more than 2%. Now, strictly speaking, PQR Limited does not come within this purview at all because Mr. A is holding only 1% of the paid up share capital, less than 2. Mrs. A is holding, but that's not covered. So, my humble view, section 184 itself will not apply to this transaction. We'll see it again when we come to 184 in more detail. But suppose this guy is holding 3%, then in that PQR Limited, then he is an interested director. 2%, more than 2%. Then he is an interested director. It may be Mr. A is holding 1%, another director of the company, Mr. B, may be holding 5%. Means together they are holding more than 2%. Then both are interested. Both are interested. A is interested, B is also interested. Though A is holding less than 1%, but together with the other director is holding more than 2%. In association with the director, he holds more than 2%. Then section 184 will apply. So this 184 and quorum interested director are closely linked. So you might want to remember them while preparing. Of course, some of you might strongly opine, and I've had students who have felt very strongly about it, that the word indirectly is a powerful word. So wife holding could be indirect. Unfortunately, this is an opinionated issue. I will value your opinion. Right? I will value your opinion, but I will hold this view till I'm convinced that it is wrong. Are you able to understand? I'm not saying this is my permanent decision. I may change it. But as of now, I'm of the view that since the words of the section are clear, only if that body corporate, such director or such director in association, either director holds more than 2. Here only 1%. Therefore, you're not interested. So this is the conclusion we come to. Okay. I hope this is clear. In case you have any doubt on that part, you can ask me. Anyway, don't worry. When again we will visit 184, we can again discuss this and distinguish between 184 and 188. 188 deals with related party transactions. Alag, separate. That is related party transaction procedure, provisions. Whereas 184 is disclosure of interest. Okay. Now, interested director means a guy who is interested in accordance with section 184 only. Right? Therefore, we have to read only this section. Okay. Participation of directors by video conferencing or other audio visuals shall also be counted for quorum under this. See, suppose a guy is attending by video conferencing, then in a video conferencing meeting, it can be counted. But see, if you're holding a physical meeting, there should be a physical quorum. That no compromise. Okay. Only in a video conferencing meeting, their participation by video conferencing can be counted as for purpose of quorum. Okay. Suppose the directors' quorum falls below the number of directors falls below the quorum. How can that happen? some unfortunate car accident, 2 directors, only 2 of them, or 3 of directors, 2 die in that accident. Only 1 is there. Below, this is reduced below the quorum fixed by the Act. The continuing directors or director may act only for the purpose of increasing the number of directors and or for summoning a general meeting of the company and no other purpose. So this one director, what he or she can do, hold a board meeting, no quorum, appoint additional directors to make up, can do. Or this one director can hold a meeting, summon a general meeting so that the members can appoint the shareholder. Okay. The members can appoint the directors. Only for this purpose, that's without a quorum, they can act. Okay. In case of Section 8 company, the quorum shall be, this is a separate rule for Section 8 company, the quorum shall be 8 members or 25% of its total strength, whichever is less. Okay. According to provision to Section 173(5), the provisions of Section 174 relating to quorum are not applicable to OPC, which has only 1 director. We already saw this, right? Now, in case you call a board meeting, but it could not be held for want of quorum, then what they say, don't immediately rush unless the articles of the company otherwise provide. So the articles can say, in case quorum is not present, the meeting stands cancelled. But if the articles do not otherwise provide, the meeting shall automatically stand adjourned to the same day at the same time and place in the next week. Or if that day is a national holiday, till the next succeeding day, which is not a national holiday, at the same time and place. See, normally AGM cannot be held on national holiday, right? But when it is adjourned for want of quorum, it can be held on a national holiday. Whereas a board meeting normally can be held on a national holiday also. There is no restriction. But where it is urgent for want of quorum, it cannot be held on a national holiday. It's unfortunate. Very funny. Normally, AGM cannot be held on a national holiday. You know that. But if it is urgent for want of quorum, it can be. Whereas here, board meeting can be held on any day, anywhere, any day. In fact, I have held a board meeting, means I have advised a client to hold a board meeting in an aeroplane. I'm not joking. See, there were 3 directors. Quorum is 2. We needed to approve something very urgently. Both of them are again traveling. There was an IT company and they were all heavy traveling. So it so happened 2 of the directors were coming from Delhi to Chennai by flight. It so happens I was in Hyderabad at that time. I had just completed a seminar at our ICA only at the Center of Excellence. Then I was coming back. So happened that we knew that on this day it's going to coincide. So what I said, look here, all of us are going to be in that flight. Let us hold a board meeting in that flight. Srikanth, if you are okay, I'm okay. So what we did, I took the the attendance register from the company secretary with me. Then I boarded the flight at Hyderabad. We ensured that we were sitting next to each other in the flight. And in the flight, quickly we got signatures and all. After all, in the flight, nothing wrong. There is no control on venue, etc. Okay, you can have totally front functional. So notice was given. One director sent apology because he was abroad. Video conferencing and all, at the time it was not there. These 2 guys are physically present in India in the flight. So Delhi to Chennai, they got in. I got in at Hyderabad. I said, I come. Then we finished everything over. Before the flight landed, we have taken all decisions. Attendance side. Then they got on, they went home, they went abroad. Company goes on with its business. Okay. So just giving this example to show you how the law is theoretically dry. But once you apply it in practice, it can be very exciting and in application. In fact, the company secretary of that company did not know what to do. Kept on crying, saying, so our board meetings, so our board meetings. I said, what's your problem, man? You want to have a board meeting, right? Then I discussed with them. I said, what are we to do, Srikanth? What are we? I said, what are you doing on such and such a day? We are in Delhi. How are you going to come back? Then this flight. Okay. I'm in Hyderabad. I can also join you. Shall you have money? See, this is how we have to take a quick call. As a chartered accountant and member of our institute, you should know how to think on your feet. Okay. You should take decisions quickly, advise your clients and go on. All the knowledge that you're acquiring, all the theoretical stuff that you're mugging up, is of no use unless you are able to apply it in real life situations and give solutions to your company or your client. I'm even at the cost of irritating some of you, I want to repeat this. Some students are so brilliant, they mug up, they remember so many things, they are brilliant. But when it actually comes to application, they say, no, sir, this section, that section, this section, according to this section, that section. Agreed. There are sections, but what your client needs is a solution. What your MD or your board of directors needs at that moment is a solution. Can you give them a solution? By applying all this vast knowledge of law, Indian accounting standards, income tax, GST, information technology, blah, blah, blah. With all that, are you capable of giving a solution to your client? If you are consistently able to give solutions on the dot every time, you will be a highly reputed, shall we say, premium billing chartered accountant. But if you're simply able to repeat the section which everybody knows ad nauseum, be careful. Then that is how the grades get separated. Right? So this is just a suggestion, not meant to be taken out of context. Okay. And when I say solution, I don't mean out of the law. Please don't impute words, don't put words in my mouth which are not there. What I mean by solution is within the framework of the law, by understanding the law better, and that is the issue there. Understanding the law better, and in order to be able to do that, what you should do is not mechanically read the section and say, sir, it's saying like this, sir, that is saying. Yes, it is saying. Look at the purpose of the law. Find out what was the intention of the law when it was doing this. Once you understand the purpose of the law, you will be able to apply it better. So never study blindly, mechanically and say, sir, this section says like this, sir, that section says. Correct. Maybe the purposes are different. Maybe we can read them together and come out with a new thought. Anyway. Bonnie Joe seems to be a very active student for this meeting. Welcome, sir. So so like man of the match, Bonnie Jose may become student of this session. I don't know, because earlier Darasha used to get that award. Today she is not bothering. She's not, I'm sure she's here, but not asking too many questions. So Bonnie Jose is quickly going for the award. Sir, will it practically happen that all directors are interested? Yeah, why not? Exactly. It can happen. Why not? It can happen. In those cases, what to do? See, today they have given you this option. See, you can go through this option, 174. If it's reduced below, I gave the example of death. This is also possible. All are interested. Only one is not interested. Then, as long as the number of is reduced below the quorum, then the continuing directors, can do. Or those who are the disinterested directors can appoint to do additional members. Additional directors can be appointed. Then with that quorum, you can proceed. That is one idea. You appoint additional directors. Now that additional director will be having a quorum, right? With that quorum, you do. Like that you can do. Or hold a general meeting. And at that general meeting, you pass the resolution of the shareholders. That is the only way we go. It is definitely happen. Why not? Yeah, I have seen so many cases like that. Family-owned businesses, it happens regularly. So the one option is to appoint additional directors, and those additional directors who are not interested will form a quorum and they will pass the resolution. I like that. So this is a practical problem. Let us read it. The board of ABC Limited comprises of A, B, C, D, E, F, G, H, and I. Kitna hai? Now, 9. A, B, C, D, E, F, G, H, I. Okay, now, of these, B, C, E, G, and H are interested. So what you do? You write A, B, C, D, E, F, G, H, I. Now put circle on B, C, E, G. In a paper, you write A, B, C. Below A, B, C, you write D, E, F. Then below that, you write G, H, I. Now you, around B, put a circle or a square. C, circle or square. E, in the middle there, circle or square. G, okay. So, first G, then H. So, B, C, E, H. You'd see a nice swastika, half swastika there. Now, got it? So, these are interested. That's all. They are interested. At the board meeting, actually we called for a board meeting. At the board meeting, this is the attendance. Who are attending? A, B, C, and D. 4 people are attending. Is there a valid quorum? I think I've given the answer there, so there's no big fun for you. You cannot answer it because it's there already. But so, how do I calculate quorum? Simple. Kitna hai? Now, 9. Total strength is 9. What is the quorum? 1/3 of 9. 3. Now, so you need minimum 3 or 2, whichever is higher. So I need a quorum of 3. Many students at this stage, they will do 2 mistakes. One, they will consider, see, while calculating quorum, they will exclude B, C, E, and G and H, 1, 2, 3, 4, 5. Then they'll take the remaining people and arrive at 2 as the number. 2. Which then they'll say 2 people are there, correct. No. For calculating the quorum number, what is the quorum? Required quorum, you have to include everybody. Total strength, 9. 9 by 3, 3. Then, at this meeting, do you have 3 directors? 3 disinterested directors? No. A, not interested. B, interested. C, interested. D, not interested. So, only A and D are not interested. B and C are interested. Okay? Now, what to do? Nothing. Quorum is not present. That's all. This is classic example where quorum is not present, what to do. Okay. Of course, they could have ensured that some of the other guys attend and ensure that 3 members are there. But this has not happened. Okay. So this meeting has to be abandoned. Okay. That is the correct answer we have to give. But if you, now comes the point. Will your answer be different if you are told that F is also interested? See, the number of directors same, A, B, C, D, E, F, G, H, I. Interested director, B, C, E, G. Now F is joining. What happens when F is also interested? Now the total number of interested directors will be 6. That is 2/3 of the total strength. The minute it becomes 2/3 of the total strength, the exception will apply. Got it? Only B, C, E, G, then below 2/3. The B, C, E, G and H below 2/3. But suppose F also becomes interested, 6, which means exactly 2/3 of 9. So when the number of interested director becomes equal to or more than 2/3, then the remaining directors, not being less than 2, shall form a valid quorum, which is A and D. The remaining 2 guys will form a valid quorum. This is to help you understand this section and its context. So we can move on. In case you have any questions, do ask it now before I move on to the next topic. On quorum, any other questions if you have? Otherwise, I can move on. So now we are coming to passing of resolutions by circulation, right? Passing of resolutions by circulation. How to pass? First, we will see the procedure for passing of resolution by circulation. Okay. First condition. The resolution has been circulated in draft together with the necessary papers, if any, to all the directors or members of the committee as the case may be. See, this is applicable to both board meeting as well as committee meetings. Idea is simple. I am not able to hold a board meeting. I'm not able to even get them on video conferencing. Fellows are so busy. What to do? I need to get their approval. So I prepare, I am the company secretary. Okay, what to do? I'm going mad. So I'll prepare the draft resolution, resolve that, blah, blah, blah. Then supporting data, this is the matter. Then I will scan it or take it and then send it by mail to all of them. Or obviously today, why will I send it by post? Send it by mail, then call up everybody and say, Sir, please see the mail, sir, please see the mail, sir. Then they will see the mail. Okay, so all of them should be given a draft together with the papers. They may ask some questions also. Those questions also will be answered. And then, so what I will do is I'll send it to all of them in one mail, marking all of them as CC or BCC, so that even if one guy asks a question, it will go to everybody. And then, If they reply all, then we'll go to everybody. Then the resolution shall be sent to their addresses. I'm sorry about that. The resolution shall be sent to their addresses registered with a company in India by hand delivery or by post or courier or through such electronic means, which may include email or fax. So today, 99% it would be by emails. Today, email is considered to be old-fashioned. For example, today, when I deal with my clients and CFOs and employees and executives of large companies where we audit, they are more comfortable in a WhatsApp. Okay, so the quickly some message. Sir, Shrikant sir, I've sent that thing by WhatsApp. Kindly have a look. So sometimes some very senior people know, they say, no, I don't see WhatsApp. Kindly send me email. So that's seen as slightly older generation, old-fashioned. See how quickly email, which was considered cutting edge in 1990, has now become old-fashioned. Old people, Buddha thing. Please send an email, sir. Don't send WhatsApp. I do not see. Today, mobile telephone is there. Everybody sees. I prefer WhatsApp. It's faster than email. I use email only for formal communications. When I want to audit documentation, when I want to really nail those people, then I will send a mail officially. Otherwise, WhatsApp is more than enough for quick communication. So this is my thought I'm sharing with you. Sorry for point. So today, email itself is more of a formal communication than informal. Whereas in those days, the same Buddhas in 1990, you know what they used to say? They will say, Mr. Shrikant, all this email is all, I'm not seeing all that. Kindly send by post. So now they are saying, kindly send by email. I think another 10 years down the line, they will say, sir, send it by messenger. But by then, we might have discovered some more faster method of communicating, which these guys are not able to come up to. Okay. So one thing I have discovered is, if I want to be abreast, if I want to be aware, I should be 2 steps ahead of technology. Wherever technology is headed, I shouldn't follow. I should be 2 steps ahead and be there waiting so that when they come, I will be waiting for them and receiving them. Is the way that's the only way to live in this fast changing world. Okay, if you're not able to change quickly, gone. Right. So email is where the action is. Today, almost everything is by email. And things. Of course, still I find one more thing is many techies, people who are techies, people who work in technology companies, engineers, and sometimes even MCAs and non-engineers, they are more comfortable with email. I've noticed this than WhatsApp. Though WhatsApp is also used, they actually, because their job is continuously sitting in front of this dumb system, the laptop, and they continuously see the mails. So for the mail is something that they do 100. So I've noticed. So what I do, when I deal with people, I try to gauge them. Is this guy email guy or is he a WhatsApp guy? So if he's an email guy, I will use email. If he's a WhatsApp guy, I will use WhatsApp. If he's a phone guy, I'll call him up. If he's a courier guy, I will courier it to him. Okay. So we should adapt ourselves and not expect other people to do what we want. If you want to succeed in your life, you should change and you should adapt. And you should dynamically work. Sorry, this is sometimes some students get angry with me for giving such unnecessary gyan, which is, why are you wasting my time? You are here to teach company law. Teach. Okay. Agreed. We'll go on. So the resolution shall be approved by a majority of the directors or members who are entitled to vote on the resolution. The resolution shall be approved by a majority of the directors or members. Members here mean not members of the company, members of the committee. Committee ka member, na? Company has director, whereas committee means member, that member, not our shareholder member. Okay, got it? So the resolution shall be approved by a majority of the directors or members of the committee who are entitled to vote. Means what? Interested director cannot vote on resolution by circulation. Suppose it is a matter in which a director is interested, he cannot vote. Only those guys who are eligible, who are entitled to vote, can vote. Out of that, a majority should agree. Okay. So the rules of quorum and disinterested, interested will apply to passing of resolution by circulation also. Okay. Now, resolution by circulation is an easy option. You can resort to it when you want things to happen fast. But if this is being misused for quickly taking some decisions without proper discussion, etc., then somebody may object. where not less than 1/3 of the total number of directors of the company for the time being require that any resolution under circulation must be decided at a meeting. The chairperson shall put the resolution to be decided at a meeting of the board. This is a very important power. See, I am an independent director or I'm a minority director. I'm a director representing the minorities. These guys are trying to sell a property. Needs a lot of discussion. Who is the buyer? What is the price? Why are you selling it in such a hurry? Why don't you wait? Why don't you use auction? So many things have to be decided and I have to record it. Now, simply what they're doing, they're sending it by circulation and trying to sell, which they can do. It is a matter, sale of a property can be done by circulation. But now, I may object, but if I'm not 1/3 of the total number of directors, then I cannot do anything. But suppose I'm able to get the consent of some more people and together we are not less than 1/3, then we can object. We can say, Mr. Chairman, this has to be done only at a meeting of the board. Kindly call a meeting, we'll come and we'll discuss. 1/3, not less than 1/3 are of that view, then no passing of resolution by circulation. This is a new addition to the law. It was not there in the old law. Whereas it's a welcome addition, which is why I keep on saying these things could have been easily included in the old law. Nothing would have happened. They would have simply had one amendment there that would have solved all our problems. For this, you don't have to reinvent the whole wheel. This is my view. Now, you pass a resolution by circulation. All the resolutions by circulation, passed by circulation, shall be noted at a subsequent meeting of the board or the committee and made part of the minutes of such meeting. So what happens? I have a meeting in April, then my next meeting may happen sometime in July, no problem. So long as the gap is not more than 1 days. Then in between, I'm passing 2 resolutions by circulation. No problem. At the next meeting, there will be an item of agenda to consider or to approve or to note, because they can't approve it because it's already approved. So to note resolutions passed by circulation, 1, 2, what all the matters that in the agenda it will be discussed. Then they'll say this resolution was passed. Okay. So that any director who was sleeping, did not bother to read the mail, whatever, now we'll be aware. So he can't say tomorrow I never aware. So this meeting, if he's attending, he will be aware of it. Okay. Now, friends, sometimes it is quite possible that a person may be invalidly appointed or he may be suffering from any defect or disqualification. Now, the board of directors are not aware at the time of the board meeting that this guy is invalidly appointed or that he is disqualified. They are not aware. So the meeting is held, resolution is passed, including this guy voting, etc. Maybe this is his vote was the turning vote, whatever, the item got passed. Now, subsequently it is discovered that or noticed that his appointment was invalid because of some defect or disqualification, or he had vacated office in the meantime and he was acting. Whatever it is, at the time of the board meeting, if we are not aware, then whatever is done by the board shall not be deemed to be invalid. So acts done by a person as a director, see, a guy might have vacated. We may not be aware. See, we are uneducated people in the board. We are not highly qualified people like you, chartered accountants and all. So we do not know. So honestly, subsequently it is shown, hey, this fellow vacated office on such a day. No problem. But in the meantime, that bugger might have signed documents, contracts. He might have voted at the board meeting. All this will be valid. Acts done by a person as a director shall not be deemed to be invalid, notwithstanding that it was subsequently noticed that his appointment was invalid by reason of any defect, etc., etc. Okay. So subsequently, please understand, at the time when the resolution is passed, or when he's signing the check, or when he's signing the contract, none of us were aware that he's vacated, or that he's disqualified and he was appointed, reappointed, whatever. So ignorance is very, very important. Because if they were aware, then no protection. Okay. So acts done by the director after his appointment has been noticed by the company to be invalid shall not be valid. You can't simply conclude validity even though it has been shown that his appointment is invalid. Okay. So till it is noticed. Whatever done by him is valid. Friends, this is nothing but doctrine of indoor management. If you really look at it, see, I am a third party. I deal with you. You tell me that you are a director. I verify the MCA record. I find your name is there. What more can I do, boss? I cannot call you. I cannot take a declaration for. I can call you 166. Are you disqualified in any way at the time of appointment? Or it's too much. I shall presume that you are a director and act in good faith. So subsequently, you cannot come back to me and say, you know what? We entered into this contract. No, it is not valid. Why? Because this guy was not validly appointed. That's not my problem. That is an indoor matter. As far as I am concerned, this fellow represented himself to your director. He was a director on that day in the MCA side. That is all. So this is mainly meant to protect the third party. Please understand the context, you will understand it. Okay? Not meant to protect both. That is why once it is shown to them, thereafter they cannot play this game. Okay? See, genuinely they are not aware. And they subsequently they cannot come and say, hey, you know what? This is not valid. They can't escape from the obligation. The contract will be valid. The agreement will be valid. The checks will be passed. You cannot deny that he was not validly appointed. That cannot be taken as a defense in any court for annulling the contract or negating the contract. Normally, this type of section is called Ganga clause. As you know, I should be very, very careful while talking about all these things, but at least many of us believe, most of us in India believe that, the holy river Ganga is capable of purifying our sin, and that we worship these rivers. And when we take a bath, recently when I was in Haridwar, Rishikesh, and I went all the way up to Devaprayag, Nandaprayag, and I bathed in Devaprayag, again in Rishikesh and all. And so my belief is that the holy river Ganga will purify me. Similarly, section 176 is a Ganga clause. Even though there is a pop, even though there is a defect, section 176 will purify it. Therefore, such a type of section is called Ganga clause. You might come across the term Ganga clause. Not only here, you will find that in SEBI, you will find it in NCLT, where they will say, you will find it everywhere, Competition Commission and all, you will find it. Where, see, the member of the Competition Commission may be invalidly appointed. Even then, any order passed by him will be valid. Even though, same thing you will find there in Competition Act, in NCLT, etc. Sorry, I don't know what's happening. So, now, this is 176 is Ganga clause. We move on to another very interesting section called a topic called Committees of the Board. Right? Before I go there, up to now, any doubts you have, you might want to ask me before I go into this topic. Okay? Right. Thank you, Mr. Sudhir, for the supportive words. Thank you very much. And Boni again with a question. So you are definitely man of the match, sir. I mean, Boni Jo's student of the evening, student of this session. Anyway, let's wait till the end, because still somebody may come in and run rate may change. The number of questions may increase from somebody else. Let us see. Passing resolution by circulation can be objected by 1/3. This includes interested also, right? That is, interested can also object to this. Okay, sir. Yeah, it can. It can. Nothing wrong. So long as the number is 1/3, they may want a discussion. Yeah, why not? Why not? Even an interested director can. It's not that the 1/3 should be only disinterested directors. But by and large, think about it. Who will want to push the transaction through fast without discussion? Practically, who will want to push it? Only interested guys. So normally they will not. It's only the disinterested guys or the small shareholder guy or the independent guys will want to have discussion. But theoretically, yes, interested director can also be, if they are together 1/3, they can. It could be that there are two groups. Both are, one group is also, they are all interested in the matter. So maybe 1/3 of them want to have agreed. Why not? Good question. Very practical questions. Very interesting also, Mr. Boni. Keep the questions coming. And missing Darasha here, because usually she also raises a lot of nice practical questions. Let us see. Now, committees of the board. See, committees are meant to do some specific functions. Normally, non-statutory, that is, voluntarily, companies have many committees. For information, if you have done auditing of a large listed companies or even large, slightly above company, 300 crore and above turnover companies, or especially in the automobile industry, I find they will have a purchase committee. So certain high value purchases have to be approved by the purchase committee. Like that. Government companies, if you have audited, you will know. There will be a separate purchase committee. So that purchase committee will be having a GM factory and like the director, and all of them will be sitting in the purchase committee, and the purchase committee will decide. Like that, there will be a lot of committees. Share transfer committee will be there, so on and so forth. The disciplinary committee will be there. These are all non-statutory. But the law, the Companies Act says companies should have certain committees. These are statutory. You should have these committees. And one of the very, very important committees of the board. Okay, so how? Okay, before we go there, Aniket Jain is asking a question that my guru will never entertain in his classes. The guru will never entertain. See, how to know whether directors are genuinely not aware? They may lie. This matter is something my guru will always say, don't ask me this question, because that is not for you and I to decide. The section you have understood now. If they were not aware and it is noticed subsequently, then acts done are invalid. Whether they were aware or not is a fact, is a question of fact, which has to be proved before the tribunal or the court. It is for the directors to prove they were not aware, and it is for the third party to prove that they were not aware. So that is a subject that we will leave to the tribunal, Mr. Aniket Jain. What do you say? We will not break our head, because our understanding of the law will not be impaired by this point, right? How we will be aware. Beautiful. That is the whole subject matter of jurisprudence. They have to produce evidence. So if they are not able to produce, the presumption is that they were aware. So why are we bothered about that? If they were not aware and it was subsequently noticed, then 176 will apply. So understand the law. Okay. But you are not alone in this question. So many students will ask this question, sir, what to do if they tell you a lie? If they tell you a lie, they will not win. That is all. If they have proof, they will win. So this is called question of fact. What I am teaching is law. Okay. If you have understood the law, every factual circumstance, you have to apply the law. But if the facts of the case, I cannot say how they will lie and all. That's why my guru will never entertain this type of question. He will say, please do not ask such question, because factually what happened, how do I know? But if this is so, I can give you the law. If that is so, I can give you the law. Broader point, in the exam, how they will ask the question. It will be very simple. They will say that it was subsequently noticed. Means the fact would be given to you. Given the facts only, you will be asked to apply the law. So if the facts are given, then you can accordingly apply the law. But don't say, how come directors are genuine? Very difficult. Okay, that is between the lawyers and judges to decide. Okay, got it, Aniket? Good question, but what to do? Very practical. And don't worry. In the exam, facts will be given, which is why whenever I answer a problem question, I will restate the facts. Because only for a given set of facts can I apply the law. So I will very clearly say, this is why even when you are appearing for the when you are appearing before the tribunal or before the CIT appeals and all, before you even give your submission, you should give the first introduction, you should give the facts of the case. So once you give a fact, every fact being stated or averred in a plaint or averred in a appeal should be supported by evidence, which is a separate law. Law of evidence is there. Okay. If you are not able to prove it, that's it. You are out. So are you able to understand what I'm saying? Now, one more thing let me tell you. who will be interested in saying that they were not aware? So because the third party wants the contract to be valid. So he will keep on saying these people are not aware. One more thing, please understand. This is meant to protect the third party. Third party can simply say, boss, I'm not aware of all this. Okay, if he was not appointed, okay, I can't go and verify all these things. You guys sign now. The fact that you permitted him to sign means we are not aware. Primary proof. If I am the lawyer for the third party, I will argue, sir, these fellows signed. At the time when they signed, they obviously knew that they thought he was validly appointed. Because if they knew, then why would they allow him to sign? See, this is how a smart lawyer would argue the case in a court. But are we studying law or are we studying CA? We are studying CA. So for CA, arguments are not needed. For CA, only facts are needed. If the facts are given in the problem, I know the law. Got it? Whereas if you study law, then arguments. You can argue the case, you can present the evidence differently, etc., etc. Okay? So nothing wrong. You are studying law, but from a CA perspective. But if you want to go into all these things, you also do LLB. Where argument, where twisting, all that will happen. My son is an advocate. Every day he appears before the higher court. Not high court, he appears before magistrates and he appears before the lower courts in Chennai. Around Chennai, Tamil Nadu, he goes and he appears. Every day he has argument with he argues the case before judges. These are the questions that he has to continuously answer. How do you say your client is not aware? Sir, this is how it is. They are not aware. So question of fact. And it is for the advocates to decide. Okay. So just for your information. Aniket, just put something there because I've spoken a lot on your question. Just give me a feedback. Are you comfortable? Are you happy? At least say you are unhappy. Okay, no problem. Sometimes, I ask people, I won't ask them, are you happy? I will ask them, I hope you are not unhappy. Because that is one state, you can be happy or you can be unhappy. In between, there is one state, not unhappy. Means you are not happy, but you are also not unhappy. Chalta. Chalo. Okay. Okay, sir. Going on, sir. Life is when I ask them, how are you? Okay, sir. So that means he is not happy. He is not unhappy also. Okay. So at least not unhappy. Okay, thank you. No, you don't have to say fantastic and all, but then if you want to specialize in taxation and if you want to become a tax expert now, it makes sense to do an LLB also because you will make your money in tax practice only in tribunal. And there you will find knowledge of LLB will be very useful to you. Though the NCLT and the Income Tax Appellate Tribunal are all quasi-judicial bodies. They don't apply the strict principles of CPC or court procedure. Still, awareness of jurisprudence, awareness of legal principles will be very useful. Will be very useful. Good show. Moving on to committees of the board. All listed public companies and companies that are required to appoint at least 2 independent directors. Please link this to your appointment of directors, independent directors. You have the turnover, you have the paid up capital, and you have the loans. If those conditions are satisfied, then even an unlisted public company is supposed to appoint at least 2 independent directors. Right? So those companies which are required to appoint at least 2 independent directors shall constitute the following committees. So where you are not required to have independent directors, then audit committee is not compulsory. Nomination and remuneration committee is not compulsory. But for a listed company, listed public company, see, many students ask me, sir, what is a listed public company? I am not able to give that answer. So before you ask the question, I am raising my hand. All listed companies are public companies. So listed public company is somewhat of a tautology, stating the obvious, solecism, but still they're using the word here. So some people ask me, sir, can private company be listed? To my knowledge, no. As of today, no. You have to be, why? Come on, yeah, by definition, private company prohibits, okay, and restricts. So it prohibits subscription of shares. It prohibits any offer of shares for subscription. So such a company, how it can go public? First, it has to become a public company and then only it will get listed. So, listed company, okay. Public companies that are required to appoint, because there you will notice that unlisted public company. You can have an unlisted public company. Listed company, unlisted company. Because you can have an unlisted public company, you can have a list. Opposite of that could be a listed public company. That's all. Okay. Because by definition, all private companies will be unlisted only. Right? Anyway, no problem. These are all questions raised by students in earlier classes. So that they will ask, sir, can a private company be listed? No. Okay. Can a public company be unlisted? Yes. Okay. So, all listed companies and unlisted public companies that are required to appoint at least 2 independent directors shall constitute the following committees: Audit Committee and Nomination and Remuneration Committee. Okay. We will see what these committees are. First, Audit Committee. Audit Committee is a very, very important committee. Possibly if you are doing your articles or if you have done your articles, you might remember that when you finalize the audit, maybe if you are a senior third year article, your partner might have taken you to the audit committee meeting. So, Rahul is saying, is it a good idea to practice? Yeah, many of our members are practicing as lawyers, though they are chartered accountants. That's what I'm saying. Once you reach a certain degree of expertise in tax law, you will find that your law practice will be more lucrative than your CA practice. But you should become an expert in that. So at that time, you will find it's because what happens now, you will have to file an appeal in High Court. Then instead of relying on an advocate, you can go directly there and file it and proceed. So you can go to High Court also. Don't need to, hire an advocate. You can do it yourself. Fact that you are a chartered accountant will be useful because as a chartered accountant, you'll have in-depth knowledge of taxation. As an advocate, you will know court procedure and you'll go and file it. A lot of people are there. Easily, to my knowledge, I know about 10 people who are chartered accountants, my good friends and who studied along with me and my juniors and all, who are chartered accountants and lawyers practicing as advocates. And brilliant. So nothing wrong. It's a choice. But again, I'm telling you, you should be so expert in taxation that you will be regularly consulted by people for tax matters. And you are filing regularly, you are filing appeals and all that, then it makes sense to have depends. I also know chartered accountants who are ultimate expert in tax law, who prefer to hire an advocate and let the advocate, they hire a dog and make it bark. Why I should bark? I will hire a dog and that part alone let him do. Rest of it, I will do. Like the knowledge part, I will supply. That is also there. So they will go along with the advocate to the court and they will keep giving him inputs so that he will argue the case. Depends. Choice is yours. Depends on what you are going to do. But yes, it could be a logic. It could be logical to do it. Nothing wrong in that. All these decisions you take at an early stage. Don't wait too long. Okay. So CA, then we'll do it. Parallelly, you do LLB if possible. And then so that by CA end, you should have qualified your LLB also and come out. Or just after finishing CA, work somewhere, finish your LLB, work with in a tax firm, finish your LLB. Makes sense. Nothing wrong. These are early career decisions. Don't postpone it beyond a limit. Audit Committee. So, constitution. How many? A minimum of 3 directors with independent directors forming a majority. Minimum of 3 with independent directors forming that, which means minimum 3, out of the 2 should be independent directors. Majority of the members of Audit Committee, including its chairperson, shall be persons with ability to read and understand financial statement. They don't necessarily say chartered accountant, but they should be able to read and understand the financial statements. Okay. See, before the 2013 Act, there were audit committees. Audit committee was there in that 222A was there. I think 222A, yeah. No, I forget. It doesn't matter. So 292A. So audit committee was there. Now, so that audit committee is also there, but that is not compliant with this rule. So they say, once this law has come, within 1 year of the commencement of this act, that audit committee should be reconstituted in compliance with this rule, which is minimum of 3 with independent directors forming a majority. This independent directors forming a majority is the real challenge. Okay. Because earlier, the director of finance will also sit there. And almost all decisions will be taken. Naam ke vaste, they'll be having one independent director sitting there. But otherwise, all decisions will be taken by them. Now, not possible. Independent directors should be majority. Okay. Every audit committee shall act in accordance with the terms of reference specified in writing by the board. So the board puts in place. Usually, the terms of reference given by the board shall inter alia. Inter alia means among other things. Among other things. They can have other things also. Amongst those other things, they may, or I'm sorry, they shall include this. Compulsory. The recommendation for appointment or remuneration and terms of appointment of auditors. So appointment of auditors is subject matter of the audit committee. So that the idea is the board doesn't directly get involved in auditor appointment. So the audit committee sort of acts as a thing, independent board. But then remember, the audit committee is a committee of the board, except that it is consisting of majority independent directors. So you can't just push any firm in and try to get them appointed. Be very careful. Review and monitor the auditor's independence and performance and effectiveness of audit process. Okay. So the auditor's independence will be monitored by the audit committee and effectiveness, etc. So see, it is not enough if you simply say we are doing it. You should also document it. So there should be a meeting of the audit committee before which the auditor should give his declaration. Then they should call him, talk to him, find out whether he is truly independent. And then see, independence not only in terms of auditor's confirmation. You should verify whether he is also rendering 144 services. If he is, then where is the independence? Or if he is rendering any other service, then where is the independence? So the audit committee should tell you, if you want to appoint this fellow as auditor, then he should not do that. Like that. Okay. Now, examination of financial statements and the auditor's report, approval or any subsequent modification of transactions of the company with related parties. Later on, we will come to 188 when we will talk in detail about related party transactions. But where it is 1 crore and above, it needs approval by shareholders. But less than 1 crore, audit committee can approve it. Okay. So that will be done only by audit committee and not by board. The audit committee may make omnibus approval for related party transactions proposed to be entered into by the company. So they can say less than 1 crore, if these transactions are entered into with related parties, up to this, we have no problem. Go ahead, do it. They can prescribe a norm like that. So every time you need not come to the audit committee. In case of transaction other than transactions referred to in section 188, we'll see 188, what are those transactions. Other than that, if the audit committee does not approve the transactions, it shall make its recommendations to the board. So the power has been given to the audit committee to do. Whereas if it is covered by 188, board only can take that decision. And in some cases, it has to go to the shareholders for approval. Okay. So where it is not governed by 188 only, it will come to audit committee. In those cases, even if it's less than 1 crore, if they are not approving, they should recommend to the board, we are not approving. See, in spite of that, the board can go ahead and enter into the transaction. But there will be a clear-cut documentation that the audit committee did not approve. Later on, if there is an audit investigation into the company, inspection or investigation, this will become a problem for the managing director or whole-time director. Because they will be asked, after all, the audit committee has told no. How are you doing it? So that will become a proof that they are intentionally did it. These special provisions shall not apply to a transaction other than a transaction referred to in section 188 between a holding company and its wholly owned subsidiary. So transaction between holding company and subsidiary, this section, these special provisions, omnibus approval, etc., will not work. So any amount of any transaction involving any amount less than 1 crore entered into by a director or officer of the company without obtaining the approval of the audit committee. Okay. Not ratified by the audit committee within 3 months from the date of the transaction. Then we are talking about related party transactions, where a director or officer of the company has entered into a related party transaction less than 1 crore, then it has to be ratified by the audit committee. Without obtaining approval, he does it. And subsequently, it is not ratified by the audit committee within 3 months, then the transaction shall be voidable at the option of the audit committee. So with less than 1 crore, they give the power to the audit committee. They say, see, think about it. The director is entering into a transaction for supply of goods. Now, the price at which he is supplying is above the comparable uncontrolled price. He is supplying at a price above the cup. Obviously, that is prejudicing the company. But he is entering into it without obtaining approval of audit committee. No problem. Subsequently, at the audit committee also, they have not ratified it. But the audit committee comes to know about it through the internal audit mechanism. That is why internal audit. Now the audit committee can say, hey, you have not taken our approval. We are not ratifying it. It is voidable. That means they can decide that the transaction is void. So once they reject it, then the transaction becomes void. It is voidable at the option of the audit committee. Okay. See, basically, this whole interested director concept works on a simple principle of law, which is fiduciary responsibility. The directors, we already saw, directors have a fiduciary duty, a duty of care to be taken while entering into transactions with the company or on behalf of the company. With the company or on behalf of the company. They should ensure that they do not make you also saw the duties of director. You remember? They should not make any undisclosed profit. So, any transaction which is there, what happens now? It amounts to undue influence, right? Suppose my nephew is there. Earlier I used to say my uncle. Today I have become old enough to become an uncle. So suppose I have a nephew. Now he is running a business. And now as an uncle, I can influence him or not. So I make him enter into a contract with me. Okay, I influence him. Now I am exercising undue influence on him. Tomorrow he can always come back and say my consent was given by undue influence. Then under the Contract Act, the contract is voidable at the option of the person whose consent was so obtained. In this case, the company is the affected party. So therefore, the law says on behalf of the company, the audit committee is given the power to say void. So if the MD forces without the knowledge of the audit committee approval, he enters into a contract with the company, it is voidable at the option of the audit committee. If the transaction is the related party or is authorized by any other director, then the director concerned shall indemnify the company against any loss incurred by it. Okay, so this is this also, indemnity is also there. So loss would be again difference between the cup. See, cup is 45. You are selling it at 70. 45, 70, 25 rupees. Okay, that 25 rupees you have to is the loss to the company. Now into number of units. Compensate together with maybe if the company has made the payment to the extent of the excess payment, interest, everything will be indemnified to the company. Continuing with the terms of reference, scrutiny of intercorporate loans and investments, audit committee, valuation of undertaking or assets of the company wherever it is necessary, evaluation of internal financial controls and risk management, risk evaluation, very important function of audit committee. Continuously, they have to monitor risk, whether we are exposed and how are we protected. That is why internal audit is a very important tool in risk assessment and monitoring. And the internal audit report should be always considered by the audit committee because many things will come to the knowledge of the management audit committee only through internal audit. Because statutory audit happens long later. You can't wait for that. Which is again, many people do not understand that statutory auditor's scope of work is very, very restricted. So expecting him to do certain things is not fair. What he will be liable is on the balance sheet date, if there is a misstatement, it's not true and fair, and fellow has negligently signed it, he is caught. But if there is an internal control weakness, that is why, we give a disclaimer in the statutory audit report. Internal control is the responsibility of the board of directors, management. In this case, the audit committee. And it is their job to evaluate internal financial controls and risk management. They are primarily responsible. If something is there on the balance sheet date or in a very, very obviously in a transaction and I discover it as statutory auditor, good. But well hidden fraud here, come on. No way. But internal audit can because they are continuously monitoring and they should report it to the audit committee. Right? Monitoring the end use of funds raised through public offers and related matters. Right? So these are all terms of reference of the audit committee. The audit committee may call for the comments of the auditors about internal control systems. See, that's how you review of financial statement. The scope of audit. See, I was the internal auditor for a listed company, 2 or 3 listed companies. I used to attend the audit committee meeting and I used to tell them, hey, this is the problem. This is the problem. They will be having a discussion. Statutory auditor will also attend. In those days, when this independent director concept was not there, which means director of finance will only chair. She will chair it. There will be one independent director and one more normal director and statutory auditor, me and CFO. That's how we used to. So the CFO and his team would be answerable to us. And the internal auditor, I will report. CFO will give a reply. Statutory auditor will also give his view. And it will be very vibrant. So that is how corporate management works, in such a way that early detection of fraud is facilitated. Okay. Also, the scope of audit of the auditors can also be decided by the audit committee, and they can review the observations of auditors, financial statements, etc., before their submission to the board. Also, the audit committee shall have the authority to investigate into any matter. They can investigate. They can call for a forensic audit, and anything in the terms of reference are referred to it by the board. And for this purpose, shall have the power to obtain professional advice, if necessary, forensic audit, and have full access to information. The auditors of the company and KMP shall have the right to be heard in the meetings of the audit committee when it considers the audit report, but will not vote. Which is why I said, I used to attend and discuss. Of course, as internal auditor, statutory auditor will also be there. When his report is being considered, he will be there. So audit committee is also responsible for the disclosure in the board's report. There should be a board's report disclosure saying what is the composition of the audit committee. Suppose the audit committee has made some recommendation, maybe rejected a transaction, or they would say the financial statement is wrong to this extent. That is not accepted by the board. Then they should give it in the director's report saying audit committee made these recommendations which are not accepted by us because of blah blah. But it should be disclosed so that the shareholders will know that the audit committee reported. But believe me, in practice, I have never seen an audit committee do this. Never. Okay? Never having seen it. In fact, the great Satyam case is one where those so-called independent directors simply nodded their head and whatever Raman said, they signed on the data line. Okay? Rarely. So the bigger question I will be always asking is, are independent directors truly independent? See, the new law, the 2013 law, hats off to that. It gives a lot of teeth and power to the independent director. In spite of that, they are not willing to act. They are not. Many times, I've asked, why are the independent, what are the independent directors doing? If the minute something goes wrong, you will immediately come running to the auditor. What did you do, auditor? Sir, before you come to me, I'll ask you. I am conducting the audit at the end of the year or in the middle of the year, when almost all the transactions are over. Whereas these guys were sitting right then when the transaction was going on. Why didn't they object? What were they doing? So today, just as you have given a lot of power to these independent directors, we should also make them responsible and say, when you have not done your job, you are out. Okay? So, beautiful. Rahul, okay. No, this is a very, very broad question, Rahul. Maybe offline, not during the session. Okay? Not during the session. You're asking me for career counseling, which I would love to do, but not. This is not the forum for that. Law, since it was connected with it, I gave my view. CFA and all that, data science, not know. Okay. The audit committee does not have, because I have a syllabus to cover. But maybe if time permits, I will share some thoughts. Sir, so the audit committee does not have any literal relation with the statutory audit. Only to the... No. If I have given that impression, I'm very, very sorry. They are very closely associated with both internal audit and statutory audit. So never I said, don't put words in my mouth. So audit committee does not have any literal, I don't understand what you mean by literal relation. This 100%. See, the appointment of the statutory auditor itself, they will be doing. His scope of audit, they will be defining. Okay? They are very much connected with statutory audit. In fact, when the financial statements are finally audited, before sign off, they will give their recommendation to the board, right? They will listen to the statutory auditor and they will give that. See, statutory auditor may want to qualify. The audit committee may say what he is saying is correct. Let him not qualify. You change the accounts. That could be the recommendation of the audit committee. So if I have ever given the comment, I have only given example of internal audit. When I was doing internal audit, I kept on repeating. Did you listen to me? Statutory auditor was there. Statutory auditor was there. Okay. So statutory auditor has more powerful role to play. He will be more powerful, okay, in the audit committee. Okay. In fact, the audit committee will defer to him. Will ask his opinion. Okay. So with the statutory audit, only to the auditor, can you also say its core intention? Like, no, see, audit committee is like a watchdog or like a monitoring system. Day-to-day operations, it will not get into. The purpose of the audit committee is to ensure that sufficient internal control systems are there, that they are in place. How will the audit committee know whether it is in place or not? That is where the internal audit is a system by which the internal auditors take the internal control manual, they take the SOP, and then see whether that is being followed by the company. And where they find that there is a major material discrepancy, they will make a report to the audit committee. Then the audit committee will take a call, whether it's serious enough, whether it has been investigated or not. So this is the power. But in addition to that, they will, at the time of finalization of the accounts, they will also go through the statutory auditor's work. Review of financial statement before submission. This will be in observations of the auditor. All this is connected with statutory auditor also. They will not be involved in day-to-day management operations. No way. They are a committee boss. They will meet once in 3 months. And they will talk about overall risk issues. Remember, some of these guys will be very senior consultants or retired partners of big firms. Okay, so long as they're independent. Okay, now they also have something called Vigil mechanism. Vigil mechanism means in case there is a fraud, who will know about it firsthand? The employees, right? Especially the CFO, finance team, purchase team. They will know about the fraud well ahead. So there should be a method by which they can, inform somebody about their concerns or grievances. So a company can voluntarily have a vigil mechanism. In fact, this is also known as whistleblower policy. See, the Tata group of companies, the Tata group has something called the Tata Code of Conduct. Tata Code of Conduct, which is shared with all their senior executives right down to their managers and executives. All of them is supposed to adhere to the Tata Code of Conduct. They also have a whistleblower policy by which any employee who discovers a fraud can inform the board of directors or the audit committee. Okay, now the problem is the whistleblower can get targeted. The whistleblower can be penalized. How to protect him? That is why there should be a vigil mechanism which would give a safe method by which directors and employees will report their genuine concerns or grievances. Okay, so the vigil mechanism should be put in place by all listed companies. Companies which accept deposits from the public. Companies which have borrowed money from banks and PFIs in excess of 50 crore rupees. These companies are vulnerable. Suppose there is a diversion of funds by the management or a fraud by management or a fraud by employees, there is a possibility that these companies could become insolvent. So in order to early detection and prevention of such things, they want to have a vigil mechanism so that a director or an employee can report it through a safe mechanism. Okay. Now, where it is not a listed company or any one of this category, in case of other companies, the board of directors shall nominate a director to play the role of audit committee. In these cases, listed companies which have audit committee, the audit committee should do. But in other cases, the board shall nominate a director to play the role of audit committee for the purpose of vigil mechanism, to whom other directors and employees may report their concerns. So a director will be the vigil mechanism. Whereas for these companies, there is an audit committee, then that audit committee will be responsible for vigil mechanism. So the companies which are required to constitute an audit committee shall oversee the vigil mechanism through the committee. If any of the members of the committee have a conflict of interest in a given case, they should recuse themselves and the others on the committee should deal with the matter on hand. For example, see, Vigil mechanism could involve discrimination also, or sexual harassment. That is also coming under Vigil mechanism. Suppose there is a lady employee. She is having a complaint against one of the MD himself or against one of the senior directors that sexual harassment has been practiced. Now that guy is sitting on the audit committee. Let us say, is it fair? So he is interested now. There is a conflict of interest now. So the complaint is coming against him. He should recuse, and the others on the committee would deal with the matter on hand. Today, sexual harassment, discrimination is a very serious issue. Earlier, we were not, India, we were a little casual about it. Today, even discrimination to an extent, you can, sort of get away with it. But sexual harassment, no way. Which is why, I'm strongly, I know ladies are also listening to this. And again, remember, sexual harassment need not be only one side. It can be both sides. Okay? Men can sexually harass women. There are cases of women also sexually harassing men. There are. Be realistic. Don't be utopian. It's quite possible. So the idea is protection should be given so that they can come out and say, hey, this is happening. And they should get relief. So be very, very careful, especially when you are employed in a large corporate. Be very careful about how you are behaving with lady employees, and ladies also be careful about how you are behaving, so that tomorrow it should not be considered as sexual harassment or negative. Don't give coarse comments, etc. Derogatory comment about women in general. Try to avoid such comments. That's the point. Okay. So such a thing could lead to complaint. Today we have a sexual harassment law, okay, under which you could become. So that also will come under Vigil mechanism, not necessarily finance matters. Non-financial matters could also come, right? Discrimination also, in India, we don't have very strong law on discrimination, whereas in US, you cannot refuse to hire a handicapped person, or I should say handicapped also. I should say a person who is, there's a word for that. I'm not able to get it. Okay, who is otherwise talented or otherwise, so whatever, or challenged person, okay, physically challenged. Then in those cases, you cannot refuse to employ them. In US, the law is very strict, whereas in India, sort of you can skate to that and go. A lot of discrimination happens against women, especially in interview boards. Where, they'll keep, in India, abroad, you cannot ask a lady whether she's married in an interview. In an interview, that cannot be a question. No way. You can't ask, what are you married? How many children? No way you're going to ask these type of questions. You ask the question, this lady will just get out of the interview hall, go to her lawyer, file a suit against you. Straight away. Okay, no way. You have to fish around, you have to ask. No, straight away you can ask. Because that will mean you're trying to discriminate her as a mother or as a housewife. You're saying you may have other problems. You can't say that. Okay, be very, very careful. Such things can also come for Vigil mechanism. Okay. Now the Vigil mechanism should be put in place by the audit committee. Okay, and they will have to monitor it and ensure that there is adequate safeguard against victimization of employees and directors who avail of the Vigil mechanism. And there should be a direct access to the chairperson of the audit committee, where there is an audit committee, or the person who is nominated to play the role of audit committee in exceptional cases. Fantastic. Let us do this committee part and then we'll have a small break. So, in case of repeated frivolous complaints being filed by an employee or director, then the audit committee or the director who has been appointed can take suitable action, okay, including a reprimand. So, this should not be misused. This privilege should not be misused, clowning around and giving frivolous complaints and all. But genuine complaints, yes, welcome. So, there is also some, okay, what I will do, I will at this stage give you a small break. The time now is 8:05. So, exactly 8:15, we will adjourn, we will assemble again after a short break. Okay? Nisar, there is a break now. Nisarji, break. Welcome back from a well-deserved break. Continuing with our discussions on committees, etc. Moving on to Selection and Nomination Committee. So this committee, if you just relate this committee to your Schedule 5. If you remember, the managing director, CEO, whole-time directors have to be selected by the Selection and Nomination Committee. Do you remember Schedule 5? One of the procedure was that. This is that committee. Okay. Any company which is supposed to have independent directors or listed companies and unlisted companies, we should have minimum 2 independent directors, should have a Selection and Nomination Committee. And that committee should have 3 or more non-executive directors. 3 or more non-executive directors, out of which not less than 1/2 shall be independent directors. So 3 or more, so executive or whole-time MD, etc. will not be a member of this committee. Only non-executive directors, of which 1/2 shall be independent directors. Now the chairperson of the company. See, the chairperson is different from MD. Chairperson, if he is there, then that person, even though he is executive or whole-time director, but chairperson, okay, he may be appointed as a member of the Nomination and Remuneration Committee. See, the chairperson is the chairman of the board or chairperson of the board. He will chair the board meeting. Such a person can be a member of the Nomination and Remuneration Committee, but he or she will not chair the meeting committee. The committee will be chaired by a non-executive director. Okay, preferably an independent director, but at least a non-executive director. The chairperson alone can be here because the chairperson would be a very senior director. And he would not be MD. He would not be handling the day-to-day affairs. So he would come. See, this is in a large, very large, matured company, even family-owned. What will happen? There will be 3 generations. So the first generation would get into chairmanships and they would become chairman emeritus and all. Such a person who would also be a whole-time director may be a member of this Nomination and Remuneration Committee, but he shall not chair that committee. Okay. So the idea is to bring about some degree of independence in selection and nomination of managerial personnel. To some extent, you see, which means suppose the MD's son is an absolute drunkard, incapable, flunked college, okay, is highly unqualified for the job, okay, but they want to bring him as a director, MD, a joint managing director, a whole-time director. If it is a listed company to a great, it's a family-owned, closely held company, you don't have to ask anybody's permission. It is your company, your son, bring him. But if it is a listed company with financial institution and all, there's a need for monitoring. So there, obviously the Selection Nomination Committee will say, sir, this is the prescribed qualification for this job. Unfortunately, this gentleman doesn't have the qualification, what to do. So even before that, the MD himself will avoid it because he knows his son is not qualified. So he will not get shamed by bringing him to the Nomination Committee. This is going to be only for listed companies. Because if it is unlisted, closely held company, the MD will say, go to hell, it's my company, I'll do what I want. And there may not be need for independent directors also. Even if independent directors are there, by and large, they will simply agree and go ahead. So this is more applicable to listed companies and companies where huge financial institution funding is there and there is a lot of, then you have to comply with certain rules. So the duties of the committee is to identify persons who are qualified to become directors and who may be appointed as senior management. Recommending to the board their appointment, the evaluation of performance, so that for the top, the board of directors and senior management, the evaluation of performance will be decided by the Selection and Nomination Committee. Okay. And they might, for this purpose, they might have an independent agency, okay, to go into it. Usually, multinational firms like E&Y or KPMG or McKinsey, they would be given the job of deciding the salary because they would have a broader database of equivalent companies, equivalent responsibilities. What is the current going salary? And they would come out with a report and say, they won't recommend this is amount. They say, this is what for your job description, for the size of your company, for the complexities, other companies in similar or identical or similar situations are paying. if you want to hire this type of a talent, this is the approximate cost you will have to incur. This is something that, HR agencies are there, like Randstad and all, they will give that report and they will submit it to the committee and say this is what it is. Based on that, they will take a call. So formulating the criteria for determining qualifications, positive attributes, independence of a director, and recommending to the board a policy relating to the remuneration for the directors, KMP, etc. Okay, this is just specifying the manner for effective evaluation of performance of board. Sorry, I think we have seen this. So the nomination committee will also keep in mind the level of the composition of remuneration, which is reasonable and sufficient to attract, retain, and motivate directors of quality. The relationship of remuneration to performance is clear, and remuneration to directors, KMPs, and senior management involves a balance between fixed and incentive pay, reflecting short and long-term performance objectives, etc. Now, the word senior management is used. Here they want to define it and say personnel of the company, that is employees who are members of its core management team, excluding board of directors. So one below the board, you'll find that this one below the board guys could also become KMPs. Usually they'll be called vice presidents. So, or they would be called sort of VPs, and they would not be on the board, but they will be VPs. Okay. So, board of directors comprising all members of management, one level below the EDs, executive directors, including the functional heads. So, sometimes, the chief marketing officer, the HR, the chief chief HR man, all of them could become senior management, right? Friends, you can please understand, selection nomination committee will be there only for very matured, grown, complex companies. Others, it will be only a knee jerk. For example, a listed company which is just, sort of on the verge, they will also have one naam ke vaste. Okay, but the real thing you will see only in large listed companies actively performing selection nomination committee. You also have another committee called Stakeholders Relationship Committee. Stakeholders Relationship. Stakeholder here is everybody. Depositors, debenture holders, shareholders. Everybody is a stakeholder. So where a company consists of more than 1,000 shareholders or debenture holders or deposit holders, either. So 1,000 shareholders or 1,000 debenture holders or 1,000 deposit holders and any other security holders at any time during a financial year will have a stakeholder relationship committee, so that these stakeholders can go to that committee and express their grievances. So this committee shall consist of a chairperson who shall be non-executive director and such other members as may be decided by the board. Here they are not insisting on independent because there could be a company which is not required to appoint independent directors, which can have 1,000 shareholders, etc., etc. So in those cases, they say the guy who is chairing this committee should be non-executive. The MD himself cannot come and sit. Whole-time director cannot come and sit. And such other members as may be decided. Their job is to listen to the grievances and resolve them in some way. Okay. Now, all these committees, we have seen 3 committees, right? We have seen Audit Committee, we have seen Selection and Nomination Committee, and we have seen Stakeholder Relations Committee. All these 3 committees, the chairperson of these committees should attend the AGM and the general meetings of the company, shall attend. Okay. And in case he is not coming, any other member of the committee authorized by him shall attend. And penalty for contravention of sections 177 and 178, right? 177 and 178. Audit Committee and Selection Nomination Committee and Stakeholders Committee. If there is any violation of these sections, the penalty shall be punishable with a fine of 5 lakh rupees, and every officer of the company who is in default shall be punishable with fine of 1 lakh, right? Powers of the board of directors. I'm going into this topic, right? We have finished board meetings of the board and related matters, committees, etc. I find that nobody has raised any major question. I shall presume in my favor that you have understood, but if you still have doubts, please do sort of raise it. And moving on, powers of board of directors. Okay, now the powers of the board are the power of the board or powers of the board are collinear with that of the shareholders. Collinear means equal. Okay, collinear. So whatever is the length of the power of the shareholders, that is the length of the power of the board. Theoretically, that is how we begin. So the board can thus theoretically do all the acts and things as the company is entitled to do. Agreed. But the Companies Act systematically reduces the powers of the board. Every section of the act is a systematic reduction in the powers of the board. Whatever the board shareholders can do, the board can do. But where the act says it can be done only by the company in general meeting, that is something that the board cannot do. The board of directors of a company shall be entitled to exercise all such powers and to do all such acts and things as the company is authorized to exercise and do. Thus begins 179(1). But then immediately it cuts down the power. But in exercising such power or doing such act or thing, the board shall be subject to the provisions contained in that behalf in the Companies Act, the Memorandum and Articles, any other regulation made thereunder not inconsistent therewith, including those by the company in general meeting. So, Companies Act will restrict the power because you are seeing so many sections in the Companies Act. Especially now moving forward, you will see so many restrictions on the powers of the board prescribed by the Companies Act. Or the company itself in the memorandum may prescribe a restriction or articles. Or the company may pass a resolution, thereby restricting the power of the board. So the board's power will be subject to these restrictions. Finally, the board shall not exercise powers exercisable only by the company in general meeting, either under this act, memorandum or articles or otherwise. Simple. Can the board of directors change the name of the company? Can the board of directors pass a board resolution and change the name of the company? I can even expect an answer from some of you. Can the board of directors change the name of the company? I'm so sorry. I don't know what's happening. My query pad, I'm not able to get the questions. Yeah. No. Why? Because change in the name of the company requires a resolution. Special resolution. Okay. Can the board of directors move the registered office of the company from one address to another address in the same city, town or village? Yeah, they can. Because that in the same city, town or village, no problem. You just need one address to another address, only board resolution. But changing from one city to another city, not possible. Okay, so like that, there are many restrictions on the. So every section of the Companies Act which says you have to pass a special resolution, you have to pass a general resolution, you require this majority, you require approval of shareholder. Every one of those sections is a restriction on the powers. We will be seeing so many restrictions on the powers of the board. See, ultimately, it is the shareholders who take decisions on behalf of the company. So, shareholders are the power. That power of the shareholders has been delegated through the memorandum and articles and resolutions to the board. So, that delegated power, the board is exercised. Okay. So, technically, the shareholders can give all their powers to the board. Even if they give that, the Companies Act says certain matters can be done only by the company. Those matters cannot be done by the. Now, suppose the board of directors has passed a resolution or approved a contract or approved something. Subsequently, the articles are amended by the members in general meeting, thereby, saying this cannot be done. But that will operate only for future transactions. Already completed transactions will not be covered by that. I'll give a simple example. The articles of the company prescribe that board of directors can borrow such sums of money from the bankers of the company as may be required from time to time. No problem. So the board of directors are now allowed to borrow whatever they want. No restriction. Based on that, the board has borrowed 2 crores. No problem. Well within the limit, no problem. 2 crores. They have borrowed. Agreed. Now the company suddenly feels, we should not give this type of umbrella powers to these guys. So we will amend it. So what they do, they amend the articles and say, from now on, up to 1 crore you borrow. Beyond 1 crore, you have to come to us for approval. Already 2 crores borrowed. What to do? That is valid. So any resolutions passed in the general meeting cannot invalidate any provision that the board of directors made prior to the resolution. So the already borrowed amount above 1 crore, no problem. From now on, you cannot borrow more than 1 crore without approval. So the next borrowing, if you want to go, already 2 crores now, you have to get the approval from the shareholders. So this is the meaning of this provision. So we go into the restrictions on the powers of the board. Please understand, shareholders are having supreme power. Within that power, board of directors, the MD has substantial powers of management. But there are certain things that the MD cannot do on his own. So what happens now? The shareholders delegate their power to the board collectively. Then the board gives substantial powers to the MD. And the MD operates. But even the MD cannot do certain things which are stated as powers to be exercised by passing resolutions at board meetings. So MD can hire and fire. He can buy property, sell property. All these powers can be delegated by the board to the MD. And the shareholders have delegated to the board. Board will delegate to the MD, no problem. But certain powers can be exercised only by passing a resolution at a meeting of the board. So MD cannot do it on his own. What are these powers? Very important. Try to remember these powers, which can be exercised by the board only at a meeting of the board. Make calls on shareholders in respect of money unpaid on their shares. So the power to make calls can be exercised only at a meeting of the board. Authorize the buyback of securities and shares. Buyback authorization, you remember, 10%, up to 10% the board can buy back, right? Buyback. So that authorization can be given by the board only at a meeting where all of them should come, majority decision. MD alone cannot say we will buy back, right? Issue of securities, that is further public offer accepted. Investing the funds of the company, right? Be careful. Investing, just keep it in mind. Means making intercorporate investments, investing in government securities, whatever. Board MD cannot do normally unless he gets at a meeting of the board. Borrow monies. Okay, so technically, if you want to borrow money, the MD cannot take that decision. He has to bring it before the board of directors, and the board should pass a resolution at a meeting of the board. This borrowing money does not apply to borrowings by a banking company from other banking companies or RBI other banks. Because if for every one of that you have to go for board approval, go mad. So they exempted banking companies from borrowing from other banking companies, RBI or other banks. Why? Because on a daily basis, call money market is there. Continuously we'll be borrowing and lending. You can't go to the board for approval. Okay. Grant loans or give guarantee or provide security in respect of loans. So giving loans only by the debt. Approve the financial statements and board report. This cannot be done by MD alone. He has to call a board meeting. If you remember, this cannot be done by video conferencing also. Only physical meeting. Take over a company or acquire a controlling or substantial stake in another company. Approve amalgamation, merger or reconstruction. Diversify the business. See, these are all strategic decisions. The MD alone cannot take. He has to call a board meeting, and at a meeting of the board only the resolution can be passed. Any other matter which may be prescribed. So they have prescribed these matters. To make political contributions. If the company wants to make political contribution, we'll be seeing it shortly. 182 and all. So if you want to make political contribution, you have to do it only at a meeting of the board. Appointing or removing KMP, appointment of MD, whole-time director, CFO, company secretary, only at a meeting of the board. Appointing internal auditor and statutory auditor at a meeting of the board. Now, you'll notice that many of these powers which are restricted are financial or monetary powers, right? Now, coming to the point, some of these, if you keep calling for a board meeting, it will become a real mess. Yeah. Every time I want to invest the funds, every time I want to borrow, every time I want to give a loan, I have to call for the board meeting. It will become bugging. So what the law says, certain powers can be delegated. Some of these powers, the board may delegate the power to borrow monies, invest funds, grant loans or give guarantee or security. Okay, these three powers only: borrow, invest, grant loans or give guarantee or security. The power to do this may be delegated to a committee, to the managing director himself, or to the manager, or any other principal officer of the company, or the principal officer of a branch office. This is a delegation of powers of the board. See, banking company, it will also be investing funds, it will be granting loans. Usually that power will be delegated to the branch managers level, DGMs, zonal managers, ZMs, RMs. So all that can be delegated. Otherwise, every loan, if I have to go to the board, but there will be certain degree where I say up to this amount, even the MD can finish. But beyond that, it has to come to the board approval, like that. Mostly banking companies and NBFCs do this. Okay, they give power, delegated power. But that decision, that power, delegating resolution should be passed by a resolution at a board meeting. So this power may be delegated by passing a resolution at a board meeting. Got the point? So you want to delegate the power to any of these guys, then the board should meet once and say, these powers are delegated. Especially for a banking company, every year they will have a meeting and they'll say, next year, these are the powers, ZM up to so much, RM up to so much. It will be a bound book powers, which will be given to these people for safekeeping. So they will know the limit up to which they can go. Beyond that, they have to go to their top management. So delegation has to happen at a meeting of the board. Okay. Now, acceptance of deposits by a banking company in the ordinary course of business from the public is exempted from this. That doesn't amount to borrowing. Okay. The power to borrow money is mentioned in clause 179(3)(d). 179(3)(d). Okay. Pertains to actual borrowing and not to the day-to-day operation of such loan facility. Okay. Now, a Section 8 company's board may exercise powers of D to F, investing, borrowing, and granting loans by passing a resolution by circulation. But other than Section 8 company, these powers cannot be done by circular resolution. These matters cannot be done by resolution by circulation. You have to have a physical meeting or a video conferencing meeting, and at that meeting you have to pass a resolution. Even for delegation. Only 3 powers can be delegated, right? Don't forget that. All these powers cannot be delegated. Only investing, borrowing, and granting can be delegated. Okay. Of course, subject to this, the company can always impose restrictions and conditions on the board in respect of above powers. They can put conditions. They can say, hey, even you cannot do this. You come to me. So this doesn't mean that these powers are exclusively belonging to the board. No, they are Always the board of the shareholders can say, come to me. They are the ultimate control. So all corporate power emanates or has its source in the shareholders. From there, it comes to the board. Then from the board, it goes to the committee, managing director, etc. Okay. That is how the powers are transmitted. All this should be documented. Then only it is. We move on to another possibly very important section, and I would say very interesting section also, section 180. Now, some students keep asking me in those classes. Now, in this batch, I'm not getting that question. In those classes, earlier batches, they used to ask me, sir, should we remember the section numbers? Good question. My answer, not necessary. Even if you do not know the section number, if you are able to write the content correctly, good. But in case you are able to remember the section number and you quote it, you will have a slight edge over other students. Slight edge means you might ask me, sir, slight edge. Why should I bother? I will tell you. Suppose you want to get a rank or you aggregate issue. That slight edge will make a big difference. Because, see, let us say, every question, you are able to give the section number or some case law. Then what happens now? Suppose the question has 5 marks. Everybody will get 3 marks. Well-presented answer will get 3.5 or 4. When you write the section number also, the examiner is so damn impressed, he will give you 4.5 out of 5, which is almost 95% of that. Remember, your run rate, your average will keep going up. So that way, you can ensure that your mark run rate is up by doing all this. Okay, sir, I'm not able to remember section number, sir, please. Even I'm unable to remember. Honestly, in those days, I used to know about 250 to 275 sections of the old law by heart. I knew the section by heart. In fact, I will walk into the class without the Bar Act. I'm not joking. That 90s, 95, 96, 2002, I'll simply walk into the class and I will take up the topic for the day. I will quote the section from the Bar Act. Not boasting. Remembering those days. Once students will be keeping the Bar Act and sitting in the class, they will be following that. And they'll say, sir, exactly what is stated in the law. But that was in the old law. Somehow I am unable to remember it that way in the new law. Don't ask them. The new law is so badly drafted. But section numbers are all just like that. I will tell which section, which subclass, which. Today, I'm not able to remember, nor am I trying to remember, because why should I? Buddha ho gaya na? But in your case, as students, as possibly getting for marks, you might want to remember. Even if you are not able to remember all the sections, try to remember these sections. From now on, the sections which I'm going to deal with, 180 to say 195, if you can remember the section number at least, it will be good. For this section, it will be good if you remember the subsection also. Because these are regularly used sections. 180, 1A. I'll tell you, recently I got a query from one of my clients. They are selling a property. The buyer wanted 180, 1A resolution to be passed. So the question which came to me was whether 180, 1A resolution is to be passed. So there, knowing section 180, 1A by name is good. So we won't waste our time saying selling, leasing. Sir, 180, 1A, Verma, will it come or not? Applicable or not? Then that was a question raised. I said, please send a query by mail. They sent it. Then I gave my reply based on this section, which you are now going to see. About 1.5 page, I sent an email. And of course, chargeable. Okay, chargeable. I said 180, 1A will not happen. Right? They sent me the balance sheet. They sent me the contract. I went through it. Then I state the facts, then state the law, then apply the law to the facts, which is nothing but answer for your final exam question. Are you able to understand? So the Institute ka final exam law paper is nothing but queries that could be asked to a chartered accountant in the normal course of his practice. How will you reply? A CFO in the normal course of his job duties. How will you reply? So question could be very simple. Will 180, 1A apply or not? Right? So for that, you have to understand 180, 1A. Then you have to understand the facts of the case. Then apply the 181A rule to the facts. And then say, as per 181A, this is how it is. Whereas the facts of the case, it is not so. Therefore, section 181A will not apply. Or the facts of the case are such that it is so, then 181A will apply. This is, in fact, this is the type of questions that they keep asking in the exam. So be prepared for it. At that point in time, if you are able to quote section like this group of sections, not all sections, see 166, 167, 180, 181A, 166.2. If you remember, it is good. Okay. In those days, it was 274 1G. I remember those sections still, what to do. The unlearning has not happened for me. But 181A is something that's sticking fast because we keep using it regularly in our commercial dealings. So these are powers. Section 180 gives powers which are exercised to be exercised by the board only with the consent of the company by a special resolution. So if you want to do this, you have to get the consent of the company. You have to go to the company, pass a special resolution, and come back, which is a pain. So what are these matters? First, 181A, to sell, lease, or otherwise dispose of the whole or substantially the whole of the undertaking of the company, or where the company owns more than one undertaking of the whole or substantially the whole of any of such undertakings. So now you should know what is an undertaking. Undertaking means anything by which the company is earning profits. For example, cement factory is an undertaking. So a company may have a cement division. That entire cement division is an undertaking. Now, out of that, okay, one cement factory would be also substantially the whole of the undertaking. Okay, so let us imagine that a company is having cement division. It also has finance company. It also has FMCG, diversified conglomerate. So now they want to sell one cement factory. They want to sell one cement factory to somebody. Will it amount to sale of undertaking? This is the question. So first, what is an undertaking? It means an undertaking in which the investment of the company exceeds 20% of its net worth as per the audited balance sheet of the preceding financial year, or which generates 20% of the total income of the company during the previous financial year. So first question you should ask, is this an undertaking? So what you should do for that, you should take the balance sheet, which is what I did for this client. You should take the balance sheet, see all the income streams, take the total income of the company, then see what is the income generated by the cement division. See whether it is 20% or more. If so, then straight away it is an undertaking. No, it is not generating. Then maybe the FMCG is generating more revenue. Then, so total, see again they are talking about income. They are not talking about sales. So cement may have more sales, but income wise, FMCG may be giving more. So this may be less than 20%. Then I have to see the net worth. Net worth will be calculated as per the definition of net worth, effective capital is done. Similarly, net worth is defined in section 2. Okay, you calculate the net worth. Then calculate 20% of the net worth as per the audited balance sheet of the preceding financial year. Then see what is the investment in the cement division. You can easily find it out. Properly maintained accounts, immediately total cement ka fixed assets hai na? Take that. See whether that is more than 20% of the net worth. In this case, it will be because cement investment will be more than FMCG. Therefore, more than 20% of the net worth will be invested in the cement division. That means the entire cement division is an undertaking. Maybe we are having 3 cement factories. Together, that becomes an undertaking. Now, we are not selling the entire division. We are only selling one cement factory. Now, does it come under 181A? Now, what you should do, so we have established that the cement division is an undertaking. No, but I'm not selling the undertaking. I'm only selling a part of the undertaking. Now, I should see whether I'm selling substantially the whole of the undertaking. So they say, sale, lease, or otherwise dispose of the whole or substantially the whole of the undertaking. Okay? or where the company more than one undertaking of the whole or substantially the whole of any of such undertakings. So here we have a case where cement division is an undertaking. Out of that, I'm selling one cement factory. Now what I should do, I should see whether it comes under the definition of substantially the whole. So in any financial year, substantially the whole of the undertaking shall mean 20% or more of the value of the undertaking as per audited balance sheet of the preceding financial. So value of the undertaking is not defined anywhere. What we should do, we should see the total assets minus the liabilities for that asset. And we should arrive at the value. Then we should see whether that is 20% or more of the total value of the cement division. So I should take the total cement division. Then I should see what is the loan, adjust it, get the value of the undertaking, then see 20% of it, then check whether this undertaking which I'm going to sell, this cement factory I'm going to sell, that value is more than 20% of the total cement division. If it is more than 20%, then it amounts to sale of substantially the whole of the undertaking. Therefore, section 181A will apply. Now, in the example that came to me, that particular division, that was a property company where they had a construction division. They also had investments, say shares. So it so happens that the income from this construction was nil and the investment in shares was very high, whereas the investment in this building property was less than 20% of the total value. Therefore, I said, you are not even entering the threshold because it is not even an undertaking. Then how does it matter whether it's 20% or more? It is not an undertaking at all, as per definition of 180. So that is the answer I gave for that case. But in the cement case, what happens? It is an undertaking, and this cement factory is substantially the whole of the undertaking. Therefore, if you want to sell it, you have to pass a special resolution, and then only you can sell it. So if you are the buyer, then you should be very careful. Before you get into it, you should say, in the MOU itself, you should say, final transaction will be through only if we receive proof of passing of resolution under section 181A. Okay? But nothing contained in class A of subsection 1 shall affect the title of a buyer or other person who buys or takes on lease any property, investment or undertaking as is referred to in that clause in good faith. So, okay, 181A resolution was not passed, but I took it in good faith. Okay, assuming that you have passed the resolution. Subsequently, it transfers, you have not passed. That's not my problem. Same, it's all indoor management, protecting the third party. Okay, the sale or lease of any property of the company where the ordinary business of the company consists of or comprises such selling or leasing. See, suppose I am in a real estate business or I am in construction. Then selling houses and selling land is part of my business now. In that case, this won't apply. Okay, got it? You might ask me, sir, why couldn't you have given that as a solution for this company? Because that was not stock in trade. They are talking about stock in trade here. Where you are selling now, it will become stock in trade. It so happened the asset being sold belonged to the construction division, but it was not stock in trade. It was in fixed asset. That is why we have to go into 181A and all that. Suppose it is in stock in trade, no problem. Because the business of the company is buying and selling property. No problem. We can sell it. Okay. So you have to be very careful. Since I am teaching a final students, now I'm taking certain liberties in assuming that you are aware of certain basics. But if you still have any doubt on what I'm saying, kindly raise the doubt. I will definitely clarify. We go on to section 181B. 181B, right? To invest otherwise than I have supplied, it is not in the section. But if that is not there in the section, they will have a wrong meaning. So I'm unfortunately putting than there. But in the section, it is not there. Okay. But in the old law, it was there. 293(1)B, it was there. Okay. That was 181A was 293(1)A in those days. Okay. So to invest otherwise than in trust securities, the amount of compensation received by it as a result of any merger or amalgamation. I will try to explain. We are getting into a merger or amalgamation. As part of the merger or amalgamation, the company is getting some compensation, right? Some consideration. That amount they want to invest otherwise than in trust securities. See, trust securities are safe investments. FD in scheduled bank, certain safe government securities, etc. Trust securities. If you invest in that, no problem. But if you want to invest it otherwise than in trust securities, then, for example, you are merging with or an amalgamation or receiving some compensation that you want to invest in a subsidiary company, then you have to get approval of the shareholders. Okay. See, 181A, actually, if you look at the reality, they watered down the section and made it foolish. The idea was not about undertaking. It was about the shareholders have given money to the directors to buy assets, use them, earn profit, and give dividend out of that profit. There was no right to the directors to sell the property itself. If you want to do that, come to me. This is the basic principle. For example, all of you decide that you trust me. Okay, all of you give me 500 or 5,000 rupees. I collect from 100 of you. Then I use that money to buy a taxi or a car, and I keep driving it around and I get rentals. We earn very good money. I take my salary, etc., and balance profit, whatever is left over after all expenses. Good profit is there. I give you dividend every year. You are happy. I am the board of director. You are the shareholder. Now I want to sell the car itself. There I have not got the right to sell the car. You gave me the money for what? Buying the car, running it as on hire, earning money and giving you income. Now I am saying I'm going to sell the car itself. Now, as a board of director, I'm not entitled. I have to come to you. That was the spirit of this section. But by putting this 20% all nonsense condition, they have unnecessarily watered it down for no reason at all. Tell you, these fellows, when they try to be smart, they spoil the law. That's what they do. See, throughout my lectures on company law, you will find I'm lamenting the fact that the Ministry of Corporate Affairs has spoiled the law, made that law for, see, for example, see the drafting is such a silly error in drafting. To invest otherwise in trust securities. What do you mean otherwise in trust securities? Otherwise than in. If you invest in trust securities, no problem. To invest otherwise than in trust securities, you have to get the approval. Okay. Now, if you pass a special resolution for a transaction under 181A, then such a resolution may stipulate conditions, okay, including the use or disposal of the investment of the sale process. So, where the members say, you are selling this property, whatever money you get, you have to use it only for that purpose. You can put such a condition. Now, we come to possibly one of the most important sections in this. Okay, one of the most important sections in this 180, which is 181C. Try to remember this 181C. I'm not going to cover it now. We will possibly call it a day because it's getting 9 o'clock. I'm sure many of you are fatigued. I don't want to take this very important section now. I will cover it in the next class when we will also proceed with the further. Hopefully, we will complete substantial portion of this topic in the next class and let us have. So, if you found this class useful, do give a couple of feedback words in the query pad. If you have a query, let's use the last 2 minutes for queries. If you have no queries, I will wait for 2 minutes and then say bye. Wish you all a great weekend ahead. Inshallah, we will meet on Monday when we will continue with this discussion on powers of the board. Very interesting area. Going forward, it's going to be very exciting. Looking forward to meeting you all Monday evening, 6 p.m. Bye. So class got over, sir.